Spivak in San Francisco, Mike Butler in Chicago filling in for Dylan Radigan today. Because, of course, we need Mike Butler here today to balance out Ilya's bearishness. Someone needs to be getting on this rocket to the moon with me. Will the tariffs allow this to proceed, however? We're going to find out any moment now. Trump expected to speak here right at the top of the hour, running a little bit behind. But the audience is gathered in the Rose Garden, so we watch and we wait. If you're already on the platform, if you're watching us on tastylive.com, thanks for joining. Be sure to come over to youtube.com, telling us what you're trading and join the conversation. Getting a lot of background echo there all of a sudden, studio. In any event, if we take a look at these charts, we look at what's happening in this session. It was a day where we were down and then up and then down and up, and now we're up a little bit. S&P 500 on a chart, 57.10 right now, ahead of the tariff announcement, 0.64% gain. NASDAQ up by 0.75%. The Russell up 1.55% here. Bonds reverse off the highs. Yields actually move higher over the course of the session. We do see that gold and silver continue to move up, and we have a dollar that is in retreat. Mike, you're the returning champion here on Overtime, guest champion. So we'll start with you. What are you thinking about what's going to happen here over the next hour? Is it too late to do anything if you're trading futures? What's the plan?
That's a great question. I would say there's a couple of things that are in play. I think my personal feel is that the market is pricing in uncertainty just because it is Trump at the end of the day, and you never know what's going to happen. I think the last 4-year cycle that he had showed us that, with a lot of volatility in the markets, two-sided action, et cetera, et cetera. But when you look at the volatility curve from the J contract all the way to the Z, everything is in the 20s. I shouldn't say 20s, it's 20 point some number. So every single futures contract is at 20, which I've never seen before, which I think just adds to the spookiness of the scenario. And then you have a lot of people buying upside calls in the VIX, but then you also have a lot of people buying upside calls in the S&P and NASDAQ. So I think you could see this come in a lot lighter than expected and see the market start to try and recover. Or it could just be a big nothing burger with all of the call buying and volatility assets and equity assets offsetting each other. So I personally do not see a real bearish situation here. I think it's really fear the announcement, and then once the announcement is out and everything is on the table, then you digest the information and the market kind of either sputters or moves to the upside. But who am I? I'm just a guy waiting for the actual announcement to take place, just like everyone else. But what do you think?
Trump just got to the podium, so I suppose we're going to find out any minute now. Look, there were reports coming out this afternoon that the Trump administration had reached out to the UK government, which in turn passed on information to private industry. And in that conversation, there would be 3 tiers of tariffs, 10, 15, and 20%. Those different tiers or bands, if you will, would apply differently by country and by industry. We're going to find out, I suppose, any second now. 57.05 here, S&P 500 losing a little bit of ground as Trump starts to speak. The Make America Wealthy Again event has officially begun. As we find out more information, we'll be happy to pass it along here. Ilya, net, what do you make of today's action as we await these tariffs?
I think it really speaks to the idea that the market waited until February to get worried about tariffs that they knew were broadly coming in November. And November was the latest. I mean, really, the markets were probably pricing this in earlier as it looked like Trump was going to win. But after the election, the idea that there would be tariffs should have been baked in. I don't think the markets are afraid of tariffs. I think the markets are afraid of the implementation and what that implementation has meant for growth, which is why they waited until February to see the business confidence data, the consumer confidence data start to roll over and go, okay, it's not the tariffs. It's that there's a legitimate headwind to growth from worries about what the tariffs will be and how they'll ultimately look. It's the back and forth. It's the implementation. And so you see the markets today, they're not panicked going into this. And they're not panicked ostensibly because if they get clarity if they get something of a tariff scheme that they can extrapolate forward in some kind of a forecastable 6-month, 12-month, 24-month way, where they can say, okay, this is what this means, adjust expectations for inventories and hiring and consumption and investment as follows. They'll price it in, and on we go. The issue is if the announcement is nonspecific and leaves lots to the interpretation, and if it sounds like whatever the announcement ends up being is negotiable because the tariffs are a negotiating vehicle, not a remaking of global trade vehicle, which means that whatever is announced is impermanent. And then that's what the markets really don't want to see. So I think when you look at the price action today, I think the market isn't scared. It hopes for clarity. The issue is that it is really if the clarity doesn't come, and then the economic data for the rest of the week, ISM, NFP, tells you the economy is already in a bad way. And no clarity plus already a hit from that uncertainty to growth, that's the worst of all worlds.
Trump is talking. He's just, I wouldn't say vamping, but in terms of the actual numbers for what the tariff thresholds are, we still haven't heard those yet here. He has not provided any details. I'm trying to listen in one ear and this in the other. It's usually how the voices in my head sound, but not perhaps the best way to go about doing a show. Right now, I mean, I think that, Ilya, you're spot on. Again, Oren Cass of American Compass, he's an economist who bills himself as someone as part of the new right, not part of the old like George W. Bush, Reagan right. He's trying to provide the intellectual heft. There's that word, intellectual heft behind Trumpism. And so, as we discussed briefly yesterday, he was on the Daily Show with Jon Stewart the other night, and that interview made rounds. It was all over my Twitter feed, at least. He was retweeting it into my Twitter feed, perhaps. But the point I'm getting to is that he said that it's not the tariffs themselves, right? It's the actual implementation. We have all the costs and chaos of tariffs without the actual, potential benefits and upside of them. We do see that stocks here are off a little bit now, 56.96 here. I think a 5-minute chart better encapsulates what we want to look at as these remarks go on. I still see what appears to be just chatter. There hasn't been a number just yet. We could talk about equities here a little bit, though. Mike, I wanted to bring the Tesla conversation into this discussion because we've clearly seen some headlines around Tesla today. Elon Musk potentially leaving the White House in some capacity, although I've been questioning all day long whether or not this is actually news because Politico reported it on Monday night. It was in Brett Baer's interview with Elon Musk over the weekend where they talked about him leaving in May. But clearly the stock liked it, up 5.33%. Have you been playing in Tesla? What do you think about Tesla here, basically? Is this finally turning a corner?
I think it's an interesting move to the upside for sure. You kind of saw that spike higher, about 20 points higher, around 10-15. And it didn't really look back after that. So we can try and align like when that news hit the wire. But yeah, I think when you consider they released numbers early, some of their preliminary numbers before their projected earnings announcement, which should take place in the April 25th options expiration. So there's still plenty of implied volatility in that cycle. Plus minus 42 points on a $280 stock price is not anything to be scoffed at. Ooh, market's up 60 now. Look at that.
Oh,
hello.
I think they're coming in light.
80. Wow. Bitcoin's up 2K. What's volatility doing? Wow, volatility getting crushed here.
Gold is getting smacked around too.
Good. I rolled out of my position today, so now I have to roll this.
Good.
I got rid of everything that had like 35 days or under DTE. I just pushed out today, except at the end of the session when I told Nick and Thomas, I'm like, guys, I feel like I'm not a scalper, but I am an idiot. So I'm going to buy these 1,500 calls that expire on Friday. Just because if the reporting is accurate, then right, like Besson said cap. That means no more escalation.
Yeah.
Means we can only go down.
Wow, gold is getting brutalized here.
Yeah, big move.
Goes off. Gold.
Tesla's up almost 8 points after from the close, I should say, moving with this
I was having this conversation
risk-on move
just yesterday. Yeah, for sure. I was having this conversation with Victor just yesterday, and he was like, well, what's the weirdest out there move that might happen on this announcement? I'm like, gold goes down.
10% across the board tariffs, according to the Wall Street Journal, who just got a copy of what Trump's saying in advance. Only 10% across the board. That's not 20%.
That's not the worst.
Yes. So this kind of...
And so it's... Yeah, go ahead.
I was just going to say, this kind of goes with that there's a fear of what could happen, but if it comes in lighter, I kind of see how... I don't see how that could be a bearish thing, and you're kind of seeing that in the instant market reaction we're seeing now, but I think you need to see this sustained for multiple days, weeks, for it to kind of show the light at the end of the tunnel here. Still plenty of volatility.
Definitely. And ultimately, I mean, Mike, to your point, the key question here, as ever, is we knew we were going to get some kind of a tariff rise out of this, right? And the big question was, is it going to be big? Is it going to be small? Is it going to be this? Is it going to be that? Nobody's questioning whether we were going to get a tariff rise. Tariff rises, as the Fed has explained to us most
came all the way back, by the way.
Yeah. There it goes, by the way. That was fun.
Stock still holding.
And really speaks to this point. No matter what it is, it's a tariff hike, and the Fed is telling us that historically, and they're right, certainly, tariffs are bad for growth and a lift on inflation. You can argue about whether it's a permanent lift or a temporary lift. That is debatable. But it is, for some period of time, a lift on inflation, and for a lot of the time, a hit to growth overall, oftentimes a long-lasting kind of cooling effect on economic activity. All of this then boils down to higher bonds pretty much either way. None of this is ostensibly good.
Well, Ilya, isn't this... Now, do we have a small window here where the market got so ginned up about tariffs? We have now 5 cuts priced in. Actually, a little bit less than that here as we go into the end of the day, but basically 5 cuts priced in through the end of next year. We're going to get tariffs at a much lower rate than what's been dangled out there and feared. They're being implemented. We'll see how the implementation goes, but it looks like they're being done in a form and fashion that allows for some room for de-escalation.
Yeah.
So now you have the worst case scenario off the table with a Federal Reserve that thinks the economy is going to slow down, even if it hasn't yet, although Q1 data does look rough.
Right.
Why wouldn't the market see the lower rates now as the cushion beneath it with the tariff certainty in our pocket?
It may. We're going to have to see. I think one of the more interesting things that's going to happen here over the next 24 hours is going to be the ISM service sector index. And if that suggests that, as the S&P Global version of the data has suggested, that service sector confidence is significantly eroded, then whatever firefighting the Fed has to do on growth will be that plus tariffs, a further hit to growth. If the baseline is okay, plus modest tariffs, okay, yeah, we readjust, but it's not the end of the world. But defining the point before will be very important. The NFP report, obviously, on Friday goes even further in that direction. And we might basically now take the next 2 days for the dust to settle and for the real kind of verdict on this to happen next week. Because if there's going to be some hit to growth, then it's very important to establish from where you start. And from where you start is in the Fed's own assessment. The survey data looks awful. Does it show up in the hard data, or is it just sentiment? Well, if it shows up in the hard data this week, then we have a different environment and a different tolerance level for a tariff hit to growth.
You can see the tariff impact in the commodity space right now. Last week, we spent some time talking about why the tariff impact is producing higher copper prices but lower wheat prices. How come not all commodities are benefiting? And it speaks to that structural supply-demand imbalance insofar as the U.S. consumes more copper than it produces, and then the U.S. produces way more wheat than it consumes. And so, if anything, you're creating a supply bottleneck for copper in the short term. We're going to have to pay more to get our hands on it now. Domestically, there's going to be more competition for the copper supply available. Whereas with wheat, you're just flooding the domestic market because we're not going to be able to adjust our production quickly, or otherwise all this food's going to rot. So prices could come down in that regard in the short term. We've seen that play out historically here. Stocks are holding on to most of their gains. The Russell's up 2.48% now, 2075. The Nasdaq's up 1.61%, 19,920. Dow Jones, who cares about that? We see here in the bond market, likewise, bonds aren't necessarily losing ground, though, right? Stocks had a very positive reaction to this. Bonds basically dropped back to where they were around lunchtime and stopped falling. Ilya, I think two things can be true throughout all this. The economy is going to see lower real growth as a result of the tariffs.
Yes.
It's also possible that this is a risk neutralizing event where we now have a North Star. And as long as there isn't a threat of further escalation at this point for any arbitrary or capricious reason, then we can begin to make those kind of plans to lay out capital, and we have a little bit more certainty. It may not be certainty that we like, but at least we have certainty.
Well, that's the thing, is the markets really want certainty. And that'll be really important here, because if it looks like what this is an opening bid in a negotiation, it's tough to have certainty because these things can change. We've seen that on a dime, you have 25% tariffs. Oh, we had a call with the president of Mexico. Never mind. 25% tariff on Canada. Oh, I don't think we're going to have an issue with Canada. They're not one of the countries that have taken advantage of us. I just had a great call with Mark Carney. So the question is really of durability. Is this durable? Did we really just hear something that's going to hold and can be extrapolated by businesses and consumers for the next year? Because if you tell, let's say, a U.S. Steel manufacturer, these tariffs will hold for the next 12 to 24 months, well, then that manufacturer can make some adjustments and say, all right, I can build a factory, I can hire more people on the basis of this. Whereas people who consume steel might say, okay, I need to fire some people, I need to reorient resources, I need to cancel some investments over here, but this is not going away. None of those decisions can take place if you don't know that something might change tomorrow. And that's been the cadence of it.
Trump just said the Great Depression happened because we didn't have enough tariffs.
Beautiful.
I'm sorry. That's it for me. Like I can't like that. Intellectually, that's not a defensible statement.
Well, no, it's almost like you go to the place of maximum consensus, because of course the impact of tariffs is one of the few very consensus things in the economic research community around what caused the Great Depression. So I suppose you go to the point of maximum expert consensus and you go the other way. That seems to be the logic here.
I mean, it's widely understood and appreciated that countries erecting trade barriers in the early 1930s reduced trade globally, which in turn caused the Depression to go on because overall economic growth was lower. Yeah, like we have
data on this.
Yeah, was it the economic trade spiral graph of the 1930s, which it's a terrible visual, but it makes its way around all the time these days because of the tariff talk that's happening. But
it is as though somebody has been talking to the president about how the narrative around there has been, this is Smoot-Hawley again, and this is going to lead to the Great Depression again, and that was on the president's mind, and he wanted to go hard contrarian.
I hate this graph for a number of reasons, but it just shows as you move forward through time, trade is kind of like going down the drain here.
Yes.
The footprint of global trade is shrinking as you make your way from the late 1920s into the early 1930s. And
Yes.
if global trade in US dollar terms is dropping, what happens? That's lower real growth. Mike, surely there has to be an individual stock play that you're interested in on the other side of this. Is it Tesla? Is it Ford, GM? Is it an Amazon, a Meta? Dylan's been playing in the pool for Amazon as a kind of anti-tariff trade. Not that it's worked out necessarily that well, but it is up 2% here right now and up to close to $200 here after hours.
Yeah, I think Amazon's interesting. I was told earlier that the Zuck from Meta was at the White House or near it today. I don't have any factual data around that, but that's interesting. But no, I think when you look at what we've heard today and the notion that Elon could be stepping away from his role in government and focusing more on the Teslas of his attention, I think Tesla certainly has room to the upside. I mean, it was trading at 500 at the beginning of the year. It's at 280. And we're seeing it continue to rally after the close, up 6 points. So yeah, I think Tesla, whether you like or hate Elon, it's still a product that could certainly go up 100 points. Like, even if it goes up 100 points, it gets to the middle of the range of where it was for the last 6 months. So I definitely think Tesla's interesting. They have earnings coming up, although it'll probably be muted with some of their numbers coming out. But still, plenty of implied volatility from an options trading standpoint. There's lots of things you can do in there. I was looking at a calendar spread in there for smaller size accounts, like a 325 or a 300 strike calendar, where you're long May, short April, and then you can just roll into the earnings cycle. I really like that setup if you're planning for an upside move. But yeah, we're seeing the market sell off here, down to only up 40 now. Volatility
coming back in.
Yeah, volatility creeping back in the 20s. We were kind of getting crushed in the near term cycles. The later cycles were elevated. But
that's a sharp reversal there.
Yeah.
Oh, hello.
What did he just say now?
Oh no. Ooh, we're red. Wow.
Oh,
Yeah.
oh, whoa, whoa.
So I guess this is another question too. With some people in the YouTube chat are asking, with our tariffs out now, what is the most probable retaliation tariff you could see? And do you think it would be? What's that?
I mean,
Europe is going to come.
Canada.
And I think if you're going to be, so this is what's moving the market here, by the way, folks. Trump just clarified that the 10% across the board reciprocal tariff rate will be half the overall tariff rate.
What?
The reciprocal rate will be, oh, good. Thank you. I finally got filled on that.
Do we have a good sense of what this means?
It means that stocks now are down.
Wow.
In the session.
Wow.
So what we giveth, we take away here.
Live rug pull within 30 minutes of starting.
Gold is obviously enjoying the news. 31.85 here.
Scratch everything I said about that.
Wow.
Silver up here now nearly 2%, approaching $35 an ounce in the SIK5 contract. Likewise, you're starting to see bonds turn the corner again. They never broke through their lows earlier, and now we're back into the mid 118s here on ZB. It's a quick turnaround here as more information is coming out, and obviously we're going to be looking for more clarity here in the markets.
Wow.
Okay, so yeah,
volatility's back. Look at that. Yeah,
no,
that's
sir,
really
I don't
interesting.
hate it. So I went into this thing long bonds, short a little SPY and triple Q just a little bit, just some modest little put verticals. And it looks like maybe I wasn't totally wrong. It looked like I was going to have to do a lot of cleaning tomorrow when this first started.
I'm trying to figure this out here. Again, like trying to figure this out in real time. It looks like that he's holding up a board right now of the tariffs that are charged against the U.S. versus what our recommended reciprocal tariff rate will be for those given countries. It looks like we're slapping on a 34% tariff for China, 20% for the EU, 46% for Vietnam, 32% for Taiwan, 24% for Japan, 26% for India, 25% for South Korea. And you go down the list. Okay, UK only got 10%. That's not bad. So it looks like there are different tariff levels by country, which, you know, one of the considerations that we've talked about in recent months has been about like NVIDIA and how come Singapore is importing all these NVIDIA GPUs that if you did the math, they would be using more electricity in a single quarter than the entire country produces in an entire year. They must be a pass-through for something. If you give China a 20% tariff but only put a 10% tariff on Vietnam, you're incentivizing creating a system where Chinese companies set up subsidiaries in Vietnam. They export to Vietnam first, and then they go to the U.S. This is not that. This is absolutely not that. This is more aggressive. Yeah. So bonds here are getting a healthy bounce. Gold's getting a healthy bounce here. I don't think I'll be punching that 5,800 lotto ticket Friday.
Dollar is back storming, but interestingly, as we've suspected, Chris, it's doing a lot more moving up against the Aussie than it is against the euro or the pound. In fact, the pound is actually probably holding the best of the bunch here. Yen has gotten stronger as well because of the risk-off dynamics here. But the pound is holding up impressively, better than the yen even. The euro is holding up pretty well. The Australian dollar is getting taken to the woodshed.
It's not great, Bob. S&P now 5632. This is going to stay like this. And Mike, would you have preferred to have seen this on a Friday afternoon after the close? Because it feels like we're now going to have an hour to panic. I mean, usually the 5 to 6 p.m. Eastern hour in New York is when all the traders go to the gym or hit the bar. So
a lot of bar activity today.
Yeah. Okay. So it's more of a, like today's my off day, right? Like I guess I have Price of Truth later. Maybe not. Maybe I'll have an alcohol-free beer between shows. Because it feels like it's that kind of day. But what do you make of this whipsaw now, right? You're kind of now trapped, or you're running out of time to make any positioning updates, right? Futures market closes soon. Last trades need to be on the board already.
Yeah, they're pumping up the near-term volatility. We're now at a 50-cent-ish backwardation, in the J. The J contract's up to 21.
Up now.
Before this happened, right at the close, SPX expected move through Friday was like 110 points. So even though we're chopping up and down, we're still within the expected move. So I think if we open up or down 30 points tomorrow, I think you could see a big vol crush. I think the market was pricing in a lot more movement and one-sided movement. So, we did sell off 80 points from where we closed pretty much. But I think this is just another continuation of more to come, like more 50, 100-point moves every single day until something happens to where that's not going to be the case. But it's good for a trader's market, that's for sure.
It's a great trader's market right now. I'm just kind of, besides myself in a funny way, right? I think net, I'm still up on the day. We're doing fine. Okay. We're doing fine. We survived today. That's all that matters. But it helps being long gold and silver. I don't know what else to say.
Yeah. There you go.
Yeah.
It's the only thing that's keeping me safe and papering over my equity cents. I think it's just so funny that we get this report. Trump says it's going to be 10% reciprocal tariffs. The Wall Street Journal comes out, says we got a copy of the plan. It's going to be 10% tariffs. And Trump comes and says, actually, that's not the entire plan. We have more, folks. And is this worst case scenario, Ilya? This isn't 20% across the board. This is some getting more, some getting less. Some are getting much more than 20%.
That we have chosen to do this on a country by country basis, I think really defines the negotiability of it. And that, I think, is the ultimate read through here for me. If we said 10% across the board and nothing else, companies could go, okay, take our
Simple.
cost structure. Here's the cost structure. Adjust. We'll see you next year. Good night. The markets would love that. I think that was the initial response. They would love the forecastability.
Which one is the market in the mood for right now?
If I could see better what that is, because your name tag is over.
Oh, sorry.
Lift higher.
Nicotine or lollipops?
Oh, nicotine for sure.
Okay.
Okay. For me might be the lollipop, but I'm exposed on the bearish side of this. So send that over and we'll utilize both. I should also point out that because my kids are 4 and 7, there are just bags and bags of lollipops stashed around this house.
Nicotine around the house, yeah.
Naturally.
Nicotine lollipops, yes. This is not certainty. This is the opposite of certainty. There are individual tariff rates on countries, which means that this is indeed an opening bid on negotiation bilaterally with those countries. And if that's what it is, nobody knows what's going to happen next because we're going to talk about it for the next however many months.
So Trump's campaign rapid response team just put out the reciprocal tariff charts that are a little bit more legible to see than what we were pulling up here. In any event, let's talk about some of the numbers that we see that stand out. It's 10% as a minimum, as a floor for every nation on Earth. That's not the case for most countries. I'm most interested in Chile here, 10%, right? Thinking about what's going on with some of the commodity centers. Is China the most important one here? The 34%? Is it the EU at 20%?
Probably not, because that there would be aggressive tariffs against China was kind of a given. Just whether you do reciprocal tariffs or you don't. I think the jump on the European Union is probably the one that's going to get the most back and forth. The jump on Japan is not great. I mean, this is where the negotiations are going to come. I mean, I would expect that the one on Japan, given the kind of relatively cordial relationship between the two administrations there, you probably get that negotiated down fairly easily.
Stock S&P off 1.5% now, 55.82. Sorry, go ahead.
Yeah. No, Hegseth was just in Japan and sounding all the right friendly cues. So I think we're looking at probably something that's very negotiable. And to the extent that it's negotiable, it is uncertain.
Crazy.
New lows here for the S&P 500, 55.76. We can take a step back from our daily chart. Not thinking I'm going to punch that lotto ticket this week, guys. That does put us 50 points. Hey, listen, the gold stuff in the 3,200s is making up for it. 55.33 is the low that we have from Monday in the S&P. The Nasdaq now down by 2.4%. The low that we have from Monday is 18,976. We're about 200 points away. The Russell, which was up, now back down, 1992, which is 6 points off the low from Monday. All those gains that we saw accumulate this week have since dissipated because the tariffs have come in If you just tune back into the show, folks, let me just start over here. Ignore everything we talked about in the first 10 or 15 minutes.
Yeah.
Come in now. Join us. The water's warm. Why is the water warm? Trump put a fire underneath it. Tariff rates are not 10% across the board. Tariff rates are not 10% across the board. They are a floor of 10% across the board. Treasury Secretary Bessent was telling us that they were going to put a cap in place, potentially near 20%, and there would be tiers, as apparently was leaked to UK, according to Sky News, according to The Guardian. None of that was true. So we have a market now that is in a more significant pullback. There is a risk-off move making its way through the market. Bonds are bid. Stocks are coming off the board. Gold and silver are all up. So, Mike, let's revisit those first 15 minutes. How does Tesla feel to you now at these levels?
Well, yeah, Tesla just sold off almost 10 points. So not even Tesla is safe. Seemed to be the darling of the day, but this one's tough. I mean, I totally agree with Ilya. I think we got it's 10% across the board market reaction with the market rallying and volatility getting collapsed, and then he pulled out the foam chart, the foam chart of death, and that changed the narrative.
Let's go to visuals. Oh, no.
Pretty immediately, but looking at volatility, we're seeing an uptick in volatility, but it's nothing crazy. I mean, we were at 20 across the board in all contracts, and now we're at 21. So we've seen a little bit of an increase, which is, still a sizable percentage increase, but we're not seeing a 20 to 25, 20 to 27 move into this 200-point reversal. So I think that's interesting. I don't know. I think we were already in the world of uncertainty, and we're still in the world of uncertainty. We got a 5-minute window of maybe a little sigh of relief, and that was taken away, swept out from under us. So again, I think it's more two-sided action. Good on you for being long gold and silver. I actually got into a long silver position as like a catch-up trade today, so that should be nice tomorrow. But yeah. This is interesting. This is wild. We are not out of the woods yet.
One of the more interesting things here is that the dollar, if you look at
haven't lost money yet today. Still made $60.
It's actually up, and yields are down.
God.
So this tells you what kind of a move this is.
Yeah, it's a kind of move that pissed away my whole trading day.
Yeah, dollar and yen are up, and everything else except gold is selling. If gold starts selling too, then we're going to the mattresses, as it were.
That would be the event. I'd say let's take a look at the sector performance today, but obviously the markets move so much here after hours that the final closing prints that we see here don't even really matter. For the juxtaposition, though, I suppose it's worth noting, we had retail, consumer discretionary, banks among the top performing names. The underperformers today were all of the things that have done well this year, or at least have held up during the swing lower in stocks. Oh, of course, not just DXY, $DXY. GDXJ, XLP, GDX, OIH, XLE were the bottom 5. I have a feeling that might be reversed tomorrow. The past few weeks, discretionary has been up while all of the growthy stuff has been down. And with the NASDAQ off 2.5% right now here after hours, after being up nearly 2%, you're going to be looking at what looks like to be an ugly Thursday.
Yeah.
I think the bigger question we have to ask ourselves now is, do we trust anything that comes out of Scott Bessent's mouth moving forward? It seems to me that nothing that he has said over the past week has had any relevance to where the tariffs actually came out to. I would argue that about Kevin Hassett. I mean, what's the signal? Where do we get signals from the administration? Is it now just Trump and Trump alone? Because it feels like none of his surrogates or cabinet members portrayed any of this information accurately relative to the final product.
I'm going to revive the thing I've been saying yesterday and the day before, and really since the last CPI update, which is that the markets have stopped listening. They have heard the part from the administration that matters, which is we see the stock sell off, the market needs to detox, we don't care. And so the markets have turned to the Fed and said, okay, well, if they don't care, you are the one that has to care. That's why they went into the FOMC meeting going, if only the Fed would commiserate with us and tell us that we see what we see and we're not delusional, and that they also see what we see and will come and save us and help us to cushion all of this with cheap money, well, then that would be better. And the Fed kind of did that. And so I don't think that they're really listening to the administration, because I don't think they think that the administration is amenable to market discipline. Instead, I think they're looking to the Fed and going, well, those guys are going to keep doing what they're doing, so you have to come and backstop this thing. Much like what we learned in the wake of the '08 crisis. Of course, the Obama administration gets shellacked in the midterms, and then we end up debating the spending priorities, debating every rise in the debt ceiling. We have a sequester. Fiscal policy in the middle of a recession ends up being a headwind, not what it's supposed to be, which is a stimulus. And so the markets, what do? They turn to the Fed and go, all right, well, you got to keep this QE train going, because otherwise none of this is going to work. And really, you're the only game in town. So I think the markets basically since then have been conditioned to say, when fiscal policy is incoherent, go to the Fed as the sanity of last resort. And that's what we're going to see here. I think the markets are looking at ISM, looking at NFP and going, okay, Powell, you're going to talk after NFP. Tell us that the cavalry is coming. And if he comes out and says, I don't know, we're not sure, it's not enough hard data, that's the risk. That's where things go really haywire.
Mike, what do you make of a market reaction that sees volatility futures jump up towards the weekly highs but doesn't clear them as a result of these tariffs?
I think if we were to expect a lot more uncertainty, and I see some people in the YouTube chat asking about circuit breakers and whatnot, like that's a 7% move. You need a big move for that at these prices, but
please no.
Yeah. I think it's I guess we're still within the expected move, which is the only way I can really explain why volatility futures are creeping up, but they're not creeping up as much. If the market was only projecting a 40-point range for the rest of the week or for this announcement, and we see a 200-point sell-off from the highs, you would have seen volatility futures react in a more violent way. But I also think the fact that, like we're saying here, Jay Powell speaks at 10:25 Central on Friday, there's still a 120-point expected move for the next 2 days. So normally when we come on a Monday, we see a 120, 150-point move for the week. So I think there's still a lot of uncertainty already priced in, and just the fact that we're within the expected move, even though it's a much more scary thing when you see up 90 green to down 90 red, you're still within the expected move. So I don't know. I don't know what to say anymore.
Is this the scenario that you and Mike were? Because you are Mike. You and Nick, at least from my understanding, have been talking about like what's the worst case scenario for traders in all this. Yeah, and it's like that we just kind of stay within the expected move. Vol doesn't really tank or go up. We're just kind of pinned. Does it feel like we're gonna get pinned here?
It feels like it. Yeah, that's what Nick was calling the pain trade, where the long VIX traders are playing for an upside move. They're paying too much for the move that doesn't happen. The call buyers think that tariffs are going to come in light, and they're paying more because volatility is inflated, and they just got a 200-point reversal. So this is currently the pain trade, where vol doesn't move to any degree that's going to pay off anyone that was buying calls in the VIX, or even playing to the upside in the VIX upright. And if you were long the market, you are certainly going to feel pain tomorrow if this holds, which I assume it will. So yeah, we are in max pain territory. But again, I think we need to see, like, for us to really see a true bottom here. Like I said this before, I believe on this show specifically, you can't return to all-time highs when the VIX curve is flat or if the VIX curve is in backwardation. So until you see that come out and you see the VIX return to the teens and go back into a steep contango, you're not going to see the E-minis back at 6,000 or above. So I think we could see this continue for the rest of the year. And if we do, again, that's great for two-sided action. It's great for a trader's market versus just a passively long market for sure.
Trader's market, 5,600 back in focus here. We're off the lows by what, 35 points, maybe 30 points. We're also off the highs by 200. So what's that between friends? We are seeing those moves in the metals.
Take a look at the Atlanta Fed GDP update as of April the 1st.
No, we have to. It's so bad. It's so ugly, Ilya.
It's approaching 2% decline for the first quarter before factoring in this gold weirdness. If you leave it at face value,
it's minus 3.7.
Yeah. So if you thought that the model looked bonkers, as we've said, there's no way the economy contracts multiple percentages in the first quarter. Come on, this is weird. Not that weird.
The balkanization of trade and the eroding place of the U.S. economy in the world seems to be good for the metals here, which are holding up throughout all this, by the way. They spike after the tariff announcement. Even with the clarification on the tariffs, they're holding up. Gold did hit a new all-time high today, $3,201.60 an ounce in the GC M5 contracts. I'm playing in the GC Q5 now, where we rolled out our exposure to some new out-of-the-money calls. Those are sitting in 3250, 3275 with 84 days to go. So we have some time on our side there. Same thing for silver. Those were bumped out into the SIN5 contract, a long 36, short 37 call spread on the follow page. And so that's starting to bump back up as well. The metals, I've been evangelizing them for the past 2 years, Ilya? You've been with me here along the way.
Sure.
It feels like this is the picturesque environment for the metals right now.
The only reason I am not long gold with you right now, having been long gold with you earlier, is I got out and then didn't get back in enough because I was asleep at the wheel. But bias-wise, I'm there. Silver, to me, looks better here just because it's had less of an extrapolated move, and you have a clear high against which to look. So if you get a breakout, there you go. The gold chart looks interesting because we might have gone too far. If we look at the temporarily, the trend is up. Of this, there is no question. But markets don't move in straight lines.
Or
we probably have. Or
hear me out.
Yeah,
hear me out.
Yeah, we probably don't have any kind of near-term reason why upside can't continue. Because if you look at gold and the way it's behaved here, it's not behaved linked to the dollar or bonds or yields, which is its normal MO. It's not behaved relative to the dollar either, which is the other kind of element here. Mm-hmm. It's just moved relentlessly higher. And to me, it's kind of like what gold does when there's a war that breaks out. The markets just instinctively go to gold, not because it's helpful in a war. You're not going to throw gold bars at anyone. But that seems to be the sort of reflexive reaction where the markets go, I don't know what's going on. I don't know what variables to even look at. Buy gold. And so it seems like the on again, off again tariff thing has had that kind of a response in gold where they're like, we don't know what the variables are. We don't know what's going on. Worst case scenario, whatever, just buy gold. This is sort of like when Russia invaded Ukraine. What does gold give you as a hedge against Russia invading Ukraine? Nothing. But the markets reflexively do it anyway. And so I get the sense that maybe if the Fed actually injects a little bit of more dovishness into the conversation and the market level of concern and panic eases, that might, strangely enough, take something out of gold.
So can I ask? You're getting me thinking here.
Yeah.
Is the uncertainty removed? We just got a clear. We just got a clear plan, didn't we?
It's not removed because the plan is country by country with different rates, and so clearly an opening bid on a negotiation. This stuff can change within 48 hours if the Mexico-Canada example is anything to look at.
I couldn't help but notice that Canada and Mexico are not on these graphs at all. What does that mean to you?
I think it suggests that our thesis that what's been going on with Mexico and Canada is fundamentally a negotiation ahead of the renewal of the USMCA next year holds. I think that there are friendly leaders now as far as the negotiation process is concerned on all sides. Trump was absolutely effusive after his first conversation with Mark Carney. And that makes sense. Mark Carney is a crisis manager. He's not about any kind of nonsense. He probably went into that conversation in the transactional spirit in which it was offered. Carney saw the Bank of England through Brexit. He saw the Bank of Canada through the 2008 crisis. This is not anybody that's going to flinch at a sharp-elbowed conversation. I think the president seems to like that. The conversation between him and Claudia Sheinbaum in Mexico was cordial from the election onward. Mm-hmm. They've been having friendly conversations that both she and the president have talked up. So I think we are looking at basically something that is, again, a negotiating bid, much as we do with these reciprocal tariffs. And so that's where I think the uncertainty comes. Markets can't forecast this forward because who knows what it means. I mean, the EU tariff at 39%, is it going to stay at 39%? I don't know. Give us a week.
It's the Orange Bowl. You have Christine Lagarde versus Donald Trump, the two most orange world leaders on the planet right now, who are leading the fight versus one another. Christine Lagarde, let's be, she that fake tan is no bueno. I did something, today was a day of me punching lotto tickets for various reasons. Wrong on the 5,800 call. What can I do? I bought an 80-82 call spread in crude. I think that crude volatility is underpriced, which was the rationale for why I did it. And I know these trade barriers are going to be bad for growth, but I wanted to buy something deep out of the money. I saw today that Emmanuel Macron hosted a cabinet-level meeting with his top ministers in Paris. Usually not interesting because you never know what they're about. The French government never titles these cabinet-level meetings as anything other than a cabinet-level meeting. That was not the case today. The French government had explicitly titled the meeting to reference Iran's nuclear ambitions and how the United States may respond. And the reporting from that meeting was effectively one of two things is going to happen. Either Iran is going to sign a deal with the United States, or France is of the understanding that the United States and Israel are going to attack Iran. That also juxtaposes very neatly, or rather fits complementary with the reporting that we talked about last week, where there had been satellite imagery of a large number of U.S. military assets building up at Diego Garcia in the Indian Ocean. So connecting point A to point B, it's a straight line. It's not a pattern or a trend, but it's enough of a line for me to see with my tinfoil hat to think that maybe there's a bit of geopolitical risk looming around the corner for which the market doesn't have the capacity to price right now because we're so focused on the tariff conversation. And we're not really thinking about foreign policy at the moment as a mechanism to move the market. So I'm looking for a play to the back towards the top of the range here. It has long enough dated exposure. I think it's actually out in the CL N5 contract for 75 days. I just wanted some cover here for over the next 2-month window where if this reporting is accurate, we can have a vol expansion, and that's probably going to be bad for a whole bunch of other things in the world, right? So if there's a hedge in there with crude, if only for geopolitical risk to inflate, that in of itself is a trade, looking for the vol surface to change. And I think just at a 13.4 IVR when I was looking at it today, it was worth looking for a volatility expansion, broadly speaking, given some of the events on the ground. But guys, we're going to have to leave it there because there's more digestion ahead. We're closing out this hour. Futures markets are about to close for batch order processing here. S&P is going to be down 1.56% on the session after being basically up by that much and more. It looks like it's a 4% swing now from high to low here in the after hour. NASDAQ, same kind of play, 2.3% lower. You have your Russell off by 2.3%. Gold did touch $3,200 an ounce. We also see bonds rally back. ZB up in the high 118s once more. The next 48 hours are going to be interesting, folks. So while we take a quick break here, be sure to stay tuned, of course, next for Macro Money with Ilya Spivak. I do want to thank Ilya, of course. He's the co-host. And Mike Butler, the other co-host, continued champion, guest champion here on Overtime. So for the two of them, we will say Overtime is now out of time. See you soon. Ilya up next. I'm back for the Price of Truth with Victor. Much more Tasty Live coming at you.
See you there, everybody.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
What happens when 2 titans of trading come together to harness the power of their prowess? You get a massive display of, whatever this is. Oh, thought he had it there. Come on, gents, it's not that hard. Hit the ball with your paddle, mate. Oh, for the love of... Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market, trade ideas, and more delivered right to your inbox. Sign up at tastylive.com/newsletters.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Rolling to the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Oh, yeah. Tasty Nation, good morning.
You know you need it. Got to know.
On today's Trader Taste Test, we are going to the first Chicago location of Voodoo Donuts. Let's go. Okay, you guys.
Voodoo.
So we got a dozen of the classic Voodoo and then a dozen of the Voodoo dozen. So.
These are basic. Basic? This one.
Okay, that's going to be your taste test.
Good.
How many stars do you give it?
3 1/4.
Yeah, see, this doesn't work for me. This is for children. That's why there's cereal on top of it. This is my jam. Nice old school donut.
Old school buttermilk.
All right.
It's not a crow.
Okay, what do you rate it?
3.25.
That's sweet.
3 point. I know, because I've trained him how to be a market maker.
Now we load up the flotilla.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Liberation Day is here. How do you feel? We're going to discuss about how the markets feel and what they may do with this information tomorrow. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And what we'll do is go through where the markets were ahead of the news that we had today. Obviously, everybody was waiting with bated breath for the tariff announcement coming from the Rose Garden of the White House today. The hope was that we'd get some kind of certainty and the markets can unclench. And then we'll take a look at what this might mean going forward, because we do have some economic data to offer a nice little follow-on lens from which to look at all of what is going to happen next. So let's break this down. Here was the S&P 500 going into the close. This is before the after-hours action. Of course, we had the announcement come after the cash equity close. And as we can see here, the markets were not in any kind of panic. And we can see that here and reason that then our logic, as we've discussed it here on Macro Money over the past really months, has broadly borne out, which is to say that the markets are not afraid of tariffs. They knew about these tariffs back in November, or at least the concept that there were tariffs that were coming. The markets only really became unnerved by all of this here in the middle to late part of February. And of course, naturally, the question comes, well, if the markets don't like tariffs in general, where were they on them here, where clearly there was not a period of consternation? Why here? And it's the same story here as we were going into this announcement. What the markets wanted really wasn't a canceling of the tariffs, because clearly they knew that they were coming and they were not going to sell off on that realization alone. It's a similar story for the bonds. We see here that we have interest rates actually going up in the immediate aftermath of the election, basically saying, okay, well, we're going to have tariffs. They might increase prices a bit. Maybe interest rates need to go up some, but the economy is also doing relatively okay. And that probably is broadly a little bit more inflationary. So maybe it means the Fed needs to cut rates a little bit more. Not until or a little bit fewer times, but the cuts are maintenance cuts, and what this ultimately is going to be is not anything terribly detrimental for the overall business cycle. Obviously, that's changed, and of course, stocks reflect this as well. We've seen a much more dovish view on what was expected, but in any case, today, again, ahead of the announcement, no panic. Just a sense that, okay, maybe we'll get the clarity, and maybe that clarity will unwind this, or help to unwind it, and this. Because really, that seems to be the reason the markets are annoyed. If they weren't annoyed in November, what got them annoyed here isn't that the tariffs are coming, it is how they are coming. And the evidence that their arrival might herald some sort of inconsistency that doesn't allow businesses to plan, consumers to feel good about spending money, and so forth. And really, that came about as those forces started to appear in economic data. And of course, we start with the S&P Global PMI numbers that as of January, February show us that the economy is starting to rapidly decelerate. Now, these are preliminary figures for March, where we saw a little bit of a bounce. We've already seen the final one for the manufacturing side released earlier this week. Perhaps there'll be a little bit more of an adjustment up or down, but what we see here thematically is the most important thing. Clearly, the economy was looking very strong in the final 6 months of last year, powered by a buoyant service sector. You can see here, services powering ahead. As ever, these charts are in terms where 50 is neutral, above 50 is growth, and the further you go above 50, the faster the growth. Below 50 is contraction. The further you go below 50, the faster the contraction. So we can see here, first and foremost, services are what matter because the composite index that takes in both services and manufacturing really just follows services. Moreover, manufacturing can be in contraction territory where it was most of the second half of last year, and the economy can power ahead all the same because it's services that's pulling it. Then this occurs at the beginning of the year, and this is where the markets get upset because it's showing that uncertainty around fiscal policy and tariffs more particularly is starting to weigh on business confidence and in expectations for economic activity. And that activity slows dramatically. It has since, again, rebounded a bit if these preliminary readings hold, but nevertheless, there's been a clear level change, even if they do, to a significantly lower level, and it's happened in the service sector where you're not necessarily impacted by the tariffs directly, which tend to impact goods trade, not services, at least in their direct impact. But the real issue here is sentiment. And the idea that the way that the tariffs are being rolled out and the way that fiscal policy more generally is being rolled out is not giving businesses a level of confidence to plan forward. This is really where any of this becomes a concern. It's the same story in consumer confidence. You arrive at a place here where, again, really February and onward, consumers start to see the rollout of the tariffs, the rollout of some of these other policies, and we can see that there is a surge in inflation expectations back to where they were just at the peak of the inflationary cycle in 2022, and consumer confidence craters in its estimation primarily of what's coming next. The assessment of the current environment, not great, not moving in the right direction, but not anything scary. But the overall sentiment index is getting pulled significantly lower, back to levels unseen since the second half of 2022, largely by this drop, this aggressive decline in expectations, which itself, not surprisingly, is linked to the surge in expected inflation. And lest we think that this is all just a collection of individual points in the sort of flood of macro data that we see, consider the Atlanta Fed GDP Now forecast, not for its levels. I mean, currently, certainly it looks quite ominous, where even if we factor out the disruptive influence of gold imports, which have, according to the Atlanta Fed, been an outsized downward sort of catalyst here for the overall model and the way that it's constructed, even if we sort of predict the model looks more like this. Nevertheless, we are looking at growth for the first quarter that's deeply into negative territory and in excess of negative 1%. Now, should we get married to this number? Of course not. It'll be quite a while yet before first quarter GDP numbers come out. But the important thing is the trajectory of the line here, which reflects real-time inputs from incoming economic data. When the data comes out, there are regular revisions. There was a revision yesterday. There will be another one tomorrow. There was no real big splash U.S. economic data today, but PMIs and ISM came out yesterday. There's more of that tomorrow. We'll see another revision, but this model is revised very frequently. And so the real takeaway here is the tone of the data that's been going into the bucket. And the slope of the line clearly tells you the overall thrust of data input into the model has been exceedingly negative. And so this is really why all of this is so dramatic. It is about the uncertainty of implementation and what it means, less so the substance of tariffs as such. So then we have the announcement. And what has been the market response? Well, not great. Initially, we get a pop because it seems like what we have is a 10% across the board tariff, which would, of course, give the markets the kind of forecastability and businesses and consumers the kind of forecastability that they've been pining for, hence the positive response. But then there is a clarification saying the 10% is a floor. And above that, there will be a diverse range of levels across various countries. And this is the table that we ultimately get from the White House and that the president presented. Now, beyond looking at individual rates, because that seems hardly the main takeaway here, the real issue is how many of them there are and how disparate they are. Because in setting individual rates across all of these countries, what we essentially do is open the door for negotiation. This looks like an opening bid to discuss these levels with the countries that are above 10%, say China, European Union, Vietnam. And from that, to reach some sort of new agreement and to bring these levels down. But of course, what that means is that these levels are subject to change. And if the experience of Canada and Mexico that gave us all this consternation in sentiment that we just discussed to begin with, if that's telling of an example, then we're going to be seeing very rapid reversals on a lot of these back and forth. Especially since this is being done through executive action, and so can be flexible that way rather than, let's say, an act of Congress, which goes through a lot of deliberation and is difficult to do, but then also to undo. And so if the markets were after certainty, that's not what they got here. They got a recipe for continued uncertainty while these negotiations are taking place. You see a similar response in the bonds. Initially, bonds come in, and then once it becomes clear what the tone of the conversation is, they surge. Volatility futures, initially down, then surging back to their recent highs. This is the current front month contract for VIX futures here. And so what we're looking then to see from here is the extent to which these moves hold, because clearly the initial reaction has not been more certainty, it's been less, which is precisely what the markets didn't want to see. So when we open tomorrow, the likelier scenario seems like these moves carry forward. But of course, this is where economic data comes in. If the economy is doing relatively okay, then this impact will be more digestible. If the economy is already looking weak, as the sum of the survey data that we just looked at implies, well then that makes this that much more damaging, and that makes the uncertainty around this that much more of an economic headwind. And with that in mind, the focus turns to ISM service sector data, which very pointedly has held up better than the S&P Global version. So just to check in here, this sort of spook that we saw, which has clearly spooked the markets as well, it has not shown up yet in this ISM version of the PMIs. Now, we did get the manufacturing numbers earlier in the week. They were a little bit worse than expected. The expectation was a slight contraction. We got a contraction at a slightly faster rate. The key now then is what happens with the service sector, because again, this is the lion's share of the economy. And if the negative sentiment from this policy implementation fog that has enveloped investors here, if that already shows up in a disappointing service sector number, which looks like it'll only cool a little bit from 53 and change to 53, then the level of concern in markets really ought to multiply. And of course, the calls for the Fed to rescue investors ought to grow louder. Because indeed, as we consider what the market's release valve is on all of this, it seems increasingly that it has become the Fed, much as it typically happens when the markets perceive some sort of incoherence in fiscal policy, and then, much as they did, for example, in the aftermath of the 2008 crisis, they turn to the Fed and go, okay, well, obviously the environment is difficult. You're going to have to give us cheap money as cushion against all of these headwinds. And so as a consequence of the response that we saw here and here, we, of course, see a significant dovish revision of Fed policy expectations that as of the close today, and this might get more revision tomorrow, are calling for 110 basis points in easing this year and next in total. And we can see the markets are tilting toward front-loading that. That's a little bit different than what the Fed has. The Fed had 100 basis points in its latest forecast, from 4.4 to 3.9 this year, then to 3.4 next year. That's 50 basis points this year, 50 basis points next. In some, the markets are not too far apart, although they're starting to lean in a more dovish direction than the central bank itself. But the makeup of the way that these cuts are meant to arrive looks like they want more of them now because the growth scare is more imminent. With that in mind, if this ISM data, with the benefit of everything we've just seen and the tariff situation at least off the board as a event risk, not off the board as a risk, of course, because inherently what this means is more uncertainty and therefore more back and forth on incoming headlines. But at least with the event risk of the announcement out of the way, the question then becomes, well, how readily will the Fed come to the market's rescue? And that is very much a function of whether U.S. economic data beckons them to do it. We heard from Jay Powell at the press conference following the last FOMC meeting that the Fed is concerned, much as the markets are, but it needs to see the pain in hard, quote-unquote, data, not just surveys, in order to get to going. And so when we consider this ISM data, it is, of course, a survey, but it would be another brick in the wall of evidence that the Fed needs to see. And of course, if this misses and starts to show the consternation that S&P Global has already been calling out, well, then the Fed has a much better case on its hands as we go into NFP, that's Friday, and Fed Chair Jerome Powell's speech on the economic outlook that follows just a few hours after. So the release valve here seems to be the Fed, and the direction of travel then becomes, if the Fed is dovish enough, or it isn't. That's what stocks may hinge on. But either way, the path of least resistance for bonds now looks like it points higher still. That is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go therefrom. I'll be on with Chris for Futures Power Hour on Friday, as I am every Friday and Monday. I'll be back with Victor Jones next week on Tuesday, as I am every Tuesday, for the Price of Truth. On with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Good luck.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big. This is just moving a little too quick for me. You're a great kid.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. My co-host today, Dan Cecilia. And special guest, Stan, we've got Ace of Flowmatic on the show with us today, continuing our interview series every Wednesday. Hackerman Ace on X. Give him a follow if you're not following him already. Ace, how you doing?
Good. Thank you very much for having me, guys. I'm super excited to be here.
Yeah, we're excited to have you on the show as well. And we've got some volatility in the markets, as we were talking about just before the show started. So we've got a lot to talk about here today. But before we do, I want to jump into it right away and get a little bit of your background for everybody that might not be familiar with you. Maybe take us on your crypto journey. How did you get started into crypto? And maybe more so recently, what are you doing in DeFi?
Yeah, definitely. So my crypto journey initially started probably around like 2016. I initially had seen something on Instagram where people were kind of talking about Ethereum, and I think the price was really, really cheap at like $200 or a little bit lower than that. And I would just keep checking in on it every week, and it would keep going up. And I was like, you know what? Let me take a chance on this crypto stuff and see what's going on. And I started getting deep into that stuff. And shortly after, I got into trading, and it got to a point where I was doing really well in crypto. So I decided to go ahead and drop out of school so I can do some of the crypto stuff a little bit more. And it's just been snowballing into what I'm doing now. And for the past about 4 or 5 years, I've been full-time crypto for a little bit now, and I absolutely love it.
And I guess to dig into that a little bit more, maybe we jump over to Flowmatic. What are you doing in DeFi with Flowmatic? What are you into today?
What I'm doing in DeFi is pretty much everything on chain on Solana. I've kind of removed my trading on like centralized exchanges. I don't necessarily do it that much unless I'm doing some sort of hedge or unless I'm doing some sort of option play. So it's mostly focusing on some of this. Unfortunately, it's the meme coin stuff that I have to focus on since that's where the attention's at. And with Flowmatic, what we're doing is we're building a DLMM terminal, which kind of falls into play with a lot of the LP situation on Solana, where people can provide liquidity. And I'm sure everybody's pretty familiar this year with all the Trump stuff going on, and they were one of the biggest ones this year that used the concentrated liquidity tools, the DLMMs, and we provide tools for all that stuff.
Yeah, and with Flowmatic, as you know, in crypto, community is everything. What's your approach to building like a really solid core community over there, specifically for DeFi and on-chain traders?
Yeah, when it comes to the community, I mean, I've always looked at it something as like an organic approach. I feel like that's something that goes much better in the long ways, especially when you do it with folks who have been in the community for a long time. So that's been my approach always. I value the mutuals that I have on the Flowmatic account. I value the people who've been in crypto and don't necessarily give up and are always looking for something. So I've always approached it with finding folks that are in the trenches, and that's how kind of we've built up Flowmatic at this point. Is we've had a bunch of the OG users who've been in crypto, and they've started to learn that there's more to the space than just buying and longing a token. There's these LP methods which are much different than when they were when everybody was doing it on Uniswap v3. Now you have this stuff available on Solana. So just teaching all my community that stuff, and everybody loves it when everybody's making money together. So I think working that with the community is probably the best approach, because at that point you'll have more feedback from proper users, and that stuff will just reflect in your product later on.
Yeah, for sure. And you said Flowmatic, you've specifically been focusing on DLMMs on Solana. Can you give us a high-level explanation of DLMMs? Obviously, we're familiar with like standard Uniswap pools or even concentrated liquidity, which Uniswap v3 came out with. But what about DLMMs? Why, like, how does it work, and why is it different?
I mean, it's not too far off from what's available on Uniswap v3, so it's still kind of the same thing where you're able to concentrate your liquidity. I guess the easiest way for me to explain it to folks would be it's like when you're setting up a range for like limit orders, whether it be to the upside or whether it be to the downside, you're able to put your money in that specific area. And versus a limit order which gets filled out, or a bid order that gets filled out, you're getting paid out for as long as the price stays within your range. So it's sort of like an option strategy that you do, trying to stay within whenever price is going sideways. And so that's kind of how I would explain DLMMs to I guess, in a very high level aspect. So allows you to control something versus like an AMM, which is unlimited on each side. With the DLMM, you have a little bit more control, precision, kind of same thing like the Uniswap V3 stuff. Except on Solana, you are able to use a lot more higher of a fee rate, and they have something that kind of like combines everything in with, I think there's an echo. Yeah, it just combines everything in with like the swaps that happen on Jupiter, because you have Jupiter routing, which kind of takes into account with some of the DLMM pools, and it's just way more beneficial on Solana than it is on Ethereum, just because I'm able to charge something like a 4% fee. I'm able to get up to a max of 10% fees on single swaps. So when there is a lot of volatility, it just ends up being extremely worth it.
Wow, so that's on a per trade basis then, where you receive a fee of, like you mentioned, 4 to 10%?
Yeah, every single swap that happens that goes through your specific liquidity, let's just assume that you're the main LP and you're the only person in there, and there's people that are aping 5K per size in your specific bin position or price point. You'll be the person that's making that 4%, and if it's a large order, you'll make that 10% per swap that's going through. So when this stuff was happening back in April, when nobody was doing it and it was literally just me and maybe like 10 other people, I mean, it was amazing because I'm the only LP capturing all the volatility by myself. And that's still the case right now. It's a little trickier right now in the markets where you have to be a little in and out. But for my option traders and people who know how to kind of understand volatile markets and being able to be quick about things, it's still extremely profitable. Just have to adjust your risk a little bit.
Damn, and I thought the 5 basis points on a Uniswap V3 pool was pretty good annualized. What platform do you do this on?
So this is all on Meteora. I mean, there are other platforms to do it on, but they have platform fees. And the main reason I do it on Meteora is because they're eventually going to do that Meteora airdrop. So every dollar you make in fees is 1,000 points. And it's pretty easy to get up there on the leaderboard. And since not many people know how to do LPing on Solana until about like 2-3 months ago, it's pretty easy to kind of get yourself up there on the leaderboard and get a lot of points.
All right, I'm checking this out. I know Dan has mentioned this to me off the side of the desk at times, but I've got to check out Meteora because
we've been farming this during work, so we haven't even gotten anything done the last week. We've just been farming Meteora.
Yeah, you should definitely check it out, especially if you like understand options. That's kind of like the main lore that I kind of try to get my bigger brain friends into. I'm like, if you guys are able to play volatility with options, you can do the same thing with DLMMs without an expiration risk, and it's pure spot risk. And that just makes things so much more simpler for me, because prior to about like a year and a half and 2 years ago, I was doing perps, I was doing options, I was doing so many other things that relied on directional plays or just a lot of volatility. And I would have like that leverage position open, which had a liquidation. I'd have options, which had expirations. But DLMMs, I can get the best of both worlds. I can play something that's just in range without having to bet directional. And I can make the same amount of fees that I would with an options contract that goes a little OTM as I would with a DLMM play that just stays in range for a few days with significantly less capital risk too.
I got a question here from Juicebox on X. He says he wants to know the story about the Bowden DLMM and how insane that was.
That was in the beginning. That was like when around like April time when Bowden was going really crazy, and there was like really insane swings that were going on, like 50-60% swings, and there was people that were buying 20 to 30K buys in every time. And I was the only person LPing it, and it was fantastic because there would be days where it was like 10-15K in fees in just a couple hours, and then towards the end of it, it got even better. So it was just a lot of fee stuff that was going through. So it's just something that kind of got me hooked in. I was like, unbelievable. I'm able to make double or triple whatever my initial LP was. So if I would put in like something like 20K, it wasn't something hard to walk away with 30K, 60K back in no time, just because there was so much volatility. It's a little different now because there's more players in it, but it's still very good with like lower capital. You don't have to go all gung ho and go 6 figures in. You can still do very well with 30 to 40K.
So Ace, for anybody that's familiar with options trading, obviously on tastylive here, you talk about some of these LP strategies as being similar to option strategies. Is it fair to say that that's a strangle or an iron condor where you've got the range, you want it to stay within the range, you're implicitly short vol? Is that how you think about it?
Yeah, exactly. You're basically shorting the vol that's happening at the moment, or you're doing something like a straddle or something like that. So yeah, is exactly how it would end up being.
Awesome.
It also ends up being like kind of like the calls and puts as well if you wanted to. I just am not somebody that likes to go directional with my DLMMs because I know how difficult it can be when it's options too.
For sure. Yeah, I think when you're kind of acting as the market maker there, you want to take the delta out of it in a sense. That said, I want to switch gears on you really quickly. And as we mentioned at the beginning of the show, we got a lot going on in the markets. Let's talk markets now. For anybody that's been on X, I mean, it's just super bearish out there because the price hasn't gone up every single day like we wanted to. But what are you seeing? How are you thinking about price action, whether that's Bitcoin or ETH, Solana? Like, what are you looking at? How are you thinking about things right now?
I've been kind of posting it on my Twitter page. I use Ichimoku, and that's like the same thing that the Robinhood CEO guy uses. And so it's been pretty simple for me. I'm just looking at the one-day chart, and I'm looking for a cloud entry on my end. If we can get that cloud entry, that's basically what's going to be a long play for us. So I don't know if you can go on my feed or not, but that's basically all I'm looking across the board. Bitcoin, Solana, a lot of the majors, they're all setting up with the same exact play across the board. And it's just a matter of waiting like a few days to see if we get that entry. If we get that entry, I'll go long. If we don't, then I'm going to have to pray and hope we don't go too far down.
Yeah, do you think this is more of a correction that's underway versus the beginning of a kind of more extended bear market?
I mean, we needed to pull back anyway just because we've been going so high. I see option players are positioning for like 70K, and I'm seeing order flow coming down to like the lower 68K levels. So I do think that it's going to be a little lower. I mean, for me, I've always been a fan of the whole sell in May and go away thing because it works for me in stock markets. And it's kind of applies a little bit more in crypto now that the markets have matured. So I kind of follow that same plan, and I think that's kind of what we're seeing right now. Since May is coming up, we're seeing a little bit of a pullback. We'll probably see one last final pullback, and then we should be able to continue back on summer. But I just don't see a hard dip really happening where like everybody's expecting 40, 50K. It's just we're in such a different environment than we were before to get those kind of pullbacks. Maybe on Ethereum, we'll get down to like sub 1,000, but Bitcoin, I have a hard time believing we get that low again.
Yeah, and speaking on Ethereum, on X, you've said that you'd rather play ETH's ecosystem rather than trade Ethereum directly, especially with foundation selling pressure. What DeFi projects or tokens in the ETH ecosystem are you eyeing for the next bounce, and why?
Yeah, I mean, I guess the main ones would probably be like Premia. Premia is probably the number one thing that I'm looking at, and the main reason is because they're building products to like improve my risk factor in crypto. So that's probably my number one. I guess the other one would be is I'm more of a fan of finding newer projects that are coming out or protocols that have things you can do airdrops with, because the airdrop space has been pretty healthy for the last couple months. It's been very easy to find something, whether it be on Ethereum, whether it be on like AVAX, or whether it be on Solana, to farm for a little bit and walk away with like a higher 4-figure airdrop for just a little bit of participation. So I mean, and like my comment for like what I said about finding things in the ecosystem was mainly because, I mean, when I look at things like, for example, XMW is one of the ones, they're like a Bitcoin miner type of situation. While Ethereum was going down or kind of staying stagnant, those things were just pulling out multiple X's, and they were a legitimate project. So it does take a little bit of research, but I rather not look at some of the dinosaur projects unless I know they're going to be doing some sort of token revamp, or they're actually pulling in some sort of revenue that I know is going to end up working out in my favor later on. But long term is really hard in crypto nowadays. I feel like it's kind of unfair to push those capital gains on people when it's really hard to hold something for a year without it going down like 75-80%.
Yeah, it's been tough, especially with Bitcoin market cap dominance at, I mean, I think a new 3-year high here today, you've had a very short time horizon for a lot of things to work. We've got a question from our chat on YouTube, and if anybody is streaming this on Tasty Live, wants to ask a question to Ace, jump over to the Tasty Live YouTube channel, get into the chat there, or hit us up on Twitter. But just a quick one from Edward here. Would you play the Near protocol? Any view on that?
Yeah, Near is actually one that I was actually very bullish on last year, and I don't think I've changed any of my views, and I believe they're still kind of grinding out everything. So yeah, Near is one of the ones that when I feel like the market's taking a turn and we're finally starting to reverse out and the vibes are getting back on, I mean, that's on my top of the list to start figuring out bags and starting to scoop those things up. So yeah, definitely very bullish on Near. I like that project.
Awesome. The chat likes you, Ace. We've got some kudos to you over here.
Appreciate everybody hopping on. Thanks for joining.
Yeah. I've got a question for you. As a lot has kind of been happening quickly here with the new administration. Trump kind of stood up a while ago and said, "I'm your crypto guy," and I think for the most part we've seen some follow through there. How do you see the DeFi landscape, industry, whatever you want to call it, evolving here, maybe on the back of some regulations? I mean, is there anything that you're paying attention to that has you bullish or maybe even bearish as we see some regulatory developments, as we see some legislation make its way through?
I feel like the regulations is a double-edged sword. Like, we asked for it. I don't know how it's going to end up being when it ends up actually coming in place. But I mean, the one thing I guess would be a positive is you saw the shift the moment he came into office, where projects were a little bit more apt to kind of go with the U.S. side of stuff and kind of start coming back over here. So I think that's where the main regulations are going to end up being beneficial for us, is us actually being able to make products in the US and not have to go overseas and being able to be compliant with what's available right now. That's probably the biggest bet for us, because I know several companies right now who they make great revenue. They're not located in the US. And that goes same with a lot of exchanges. Once exchanges introduce any kind of leverage or anything, it's pretty much off the table for any kind of US users. So if America wants to continue being on the forefront of some of this stuff, I think they're going to need to ease up on this regulations, and we'll have to see if we can get some of these companies either back in the States or start creating an incentive for these companies to open up in the States so users can actually use some of these products. I mean, it's just a shame because there's a lot of things that I would like to use, but I just don't have access to. And if I want access to them, I have to go through a whole process of becoming an institutional investor in the States, and not very retail friendly in the States right now for crypto.
Yeah, it really hinders innovation. I'm personally curious to see if we get to a point where there's some value that's unlocked. When you look at, what comes to mind for me is probably like the Uniswap token or Radium, where you have these exchanges, they're cash flow positive or revenue positive, if you want to think about it that way. But there's no real way for that value to accrue to the token itself. I mean, I get that we can vote on whether they'll pass some of the fees on, but I think that if you get some regulatory clarity, then you could see a lot of value unlocked for some of these exchanges or these decentralized exchanges.
The DEX space is absolutely booming. There's so much money to be made for so many people, whether you're building trading tools, whether you're building arbitrage stuff, market making stuff. There's just so much money flowing. I mean, just Meteor alone, I believe they've done almost like 178 billion in volume or something crazy like that. So, and then now you have Pump Fund, which just came out with their own DEX and everything. So yeah, there's just tons of opportunity in crypto. It gets even more crazy every year I get into it, because I'm mostly focused on Solana stuff and AVAX stuff. And just on those sides alone, my time is like completely taken up doing AVAX projects and AVAX market making, and then doing stuff over here on Solana here and there. And I'm totally missing out on everything that happens on Ethereum, there's so many other chains, ADA, and I mean, I wish I could multiply my body.
So you have suggested that there's probably a little bit more pain coming in the market here, especially with the tariffs. But what on-chain trends or metrics do you track to know when it's time to load up and get long, or take advantage of some of these opportunities?
It just comes down to like the levels that I've seen before previously in the years. You typically see something like where it's like a 40% retrace, 60% retraced, or there's the classic 80, 90% retrace. And that's kind of like my main metric that I look for, see which kind of companies are still building and yet they've kind of hit that requirement point. Some of them might not end up hitting down to that 80, 90%. They might trend around like that 40, 60%. So that's kind of my main metric to look for, is like who's still building, who's still producing products for their community. Are they actually having any kind of volume rolled through their products? So I like to do a little bit more research on the utility side of stuff. I know right now the market is in a way where you have to do meme coins, and that's kind of the approach you have to take in DeFi. So I mean, I don't think the meme coin stuff is going to go away. So it's basically just using all my profits from meme coin to continue DCAing legitimate projects that I see are going to be worthwhile in the future. Doesn't matter what chain it's on.
Can you tell us a little bit more about what you're involved in or what you're looking at on AVAX? I personally have never owned the token. I'm not super familiar. It is one that we recently added to the list at Tasty Trade. But what has piqued your attention over there?
Yeah, I've actually been in the AVAX ecosystem now for like 2-3 years now. I actually got started with it in the arena, and the arena airdrop was really nice, and it was still ongoing, so I'm able to kind of grind out the arena airdrop. And Meteora and the DLMMs, they kind of got the inspiration from AVAX's liquidity shapes, which is nearly the identical same thing. So I'm able to do nearly the same thing I'm doing on Solana on AVAX as well with market making, and the environment is much different. I don't have a lot of people that are constantly dumping right away, so I'm able to market make a little bit better over there. More projects are doing airdrops and stuff, so the airdrop farming is fairly easy, and there's just a lot of volume going on to where I'm not worried about the downside as much as I am on Solana. Like Solana, things only last about 48 hours, maybe 24 hours. Over on AVAX, they at least last like 2 weeks for me.
You have some time.
I need that. I can't be focused all the time.
Yeah. Is there one specific DeFi trend or on-chain trend you're seeing right now in 2025?
I mean, it depends on like who you ask. For me, I would say this DLMM stuff is a pretty big trend right now. A lot of people are starting to LP again, and it's a big difference from previously when people were LPing. Previously, when people LP'd, it was normally the whales that were making a lot of money, and it wasn't really a space for like retail traders. But now with the DLMM stuff, I'm seeing so many more users that are finally understanding this stuff, and I'm seeing more and more people become experts on how to do LP stuff and realizing that there's market making tools available for retail. So that's kind of like the emerging trend I see on my side. There's obviously the whole RWA stuff, which I think is extremely huge. Like real world assets on chain is a big thing for me, especially when it comes because I'm a stock trader. And so I would love to see some of those companies or some of the commodities on chain. That would be huge. So probably those things, like LPing is back again. Real world assets is a big thing. And I'm sure everybody would agree with the AI agent stuff, but that's a little tricky on that side.
When you think about RWAs, is there a macro trade there? I mean, I kind of see people mention Ethereum in the same conversation with real world assets. Is that accurate, or is there another chain that we should be focused on?
I mean, I don't necessarily know I don't think it's like a chain specific thing. I think there's several places that are working on like the RWA stuff, not only chains that are on Ethereum alone. So I think you could probably find that stuff elsewhere. I would say the leaders are probably going to be the ones who can kind of get stuff listed the fastest. Like I see a couple people that started listing oil contracts. I saw a lot of people starting to do silver and gold. So for me, I'm like a big precious metals trader, and that's my outlook on a lot of things. Is since Dixie's going down, there's a lot of crazy stuff happening in the world. So I kind of lean more towards finding any kind of RWAs that are related to precious metals.
So we got a couple minutes left here. I want to know what your one bold prediction is for Bitcoin, crypto, or crypto broadly, or DeFi over the next year.
Let's see.
Yeah, something crazy, Ace.
Yeah, something big.
All right, let's see what we got. I mean, Ethereum, unfortunately, I'll have to give a bearish take on that one. I think there's more of a chance of something else coming up or more people kind of going towards their own chain. So I would say a crazy prediction would be is ETH is probably going to get replaced or at least not be as important as other things will. So there's that take. As far as like Bitcoin goes, I mean, I have no choice but to be very bullish on it. As far as like a timeline goes, maybe I don't necessarily have one, but for people who say it's not going to come back over 100K and it's not going to hit higher numbers, I mean, we all said that about 100K, that it wasn't going to hit up over here. And now we have people who are buying millions and billions of dollars worth of Bitcoin at these kind of levels. And so it just leads me to believe that, I mean, 200K is likely possible. Maybe I don't necessarily have a timeline for that one, but next run we have, I could totally see 150K to 200K per Bitcoin.
I love it. Yeah, this has been a good show,
you
man.
Guys, what's your guys' take on some of the markets? Are you guys bullish? Are you guys bearish?
Oh, absolutely. I mean, I'll just jump in really quickly. I think we've got a bit of a short-term correction here within a larger bullish secular trend. And I think that we ultimately are going to see prices when, we might not stay there. But if you've been in this long enough, you have seen some crazy shit. And I think that we will absolutely see that here again. I think it is contingent on kind of the macro backdrop and what happens with monetary policy. That tends to be the fuel that you need to see. But yeah, I'm with you on the 200,000 plus Bitcoin price. I think you see alts do some crazy things. So I'm very bullish, to say the least.
Yeah, I'm really bullish as well, price aside, but I'm just excited for what people are building now. Like, I feel like we have a ton of consumer applications or just like applications that are easy for normal people to use. I'm really big in NFTs and just like on-chain social. I think you mentioned the Arena before, and I believe the Arena is a social app on AVAX. So really interested in like on-chain media and like the revival of just like content creators using on-chain to monetize their stuff. So yeah, I'm really excited about some of the consumer apps coming out aside from just price.
Yeah, we've been really excited to have you on the show as well, Ace. We've unfortunately run out of time, but we've got to have you back at some point here in the near future. We'll check in on some of all of our predictions as well, our forecasts, I suppose. And yeah, again, just want to thank you for coming on the show here and look forward to speaking to you again soon.
I'd love to come back on and maybe pick your guys' brain on some of these questions.
Absolutely. Yeah, we've got a lot of good feedback as well. So thank you, everybody, for tuning in here. Make sure to follow Ace over on X at HackermanAce. If you haven't already, get over there, give him a follow, and he'll certainly be back here on the show. But that's going to do it for us this week. We will be back, Tasty Crypto Show, on Monday. Victor Jones is up next with The Price of Truth. Until then, I'm Ryan.
I'm Dan.
Peace.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
Snow, let's take a look. They did not hold that rally at all. Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal.
See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
I had the, what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine?
Crackers?
I went snorkeling.
You went snorkeling?
But I said the last time I went snorkeling.
And the fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
It just doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh, for what? For just funsies?
For my birthday.
Oh, wait, I didn't know it was your birthday this weekend?
Yeah.
Oh, happy birthday.
There you go.
I didn't know you were an Aries.
I am an Aries.
Yeah, that kind of tracks.
Something. What is your sign?
I'm an Aquarius.
Aquarius?
I'm Aquarius, yeah. Tom's a Pisces.
Pisces.
Yeah.
That makes a lot of sense.
It does.
Yeah.
It really does.
That kind of tracks.
I don't even know what that means. Whatever.
I think it means you like fish.
What happened, girl, during last call?
I lost my
You want to talk about it?
I lost my beret.
You didn't lose it.
I found it.
So you got.
I'm thinking of getting rid of it.
Oh, new look?
I'm thinking of the new look.
You should do a faux hawk.
Oh.
What is
I think you nailed it. I don't know.
No.
What is it?
Cornrows.
I could see rocking some cornrows.
Yes, cornrows.
I think you should go to Flavortown and just get the Guy Fieri spikes.
Boom. Platinum tips.
Platinum, yep.
Is it true? Did you skip the beret yesterday?
On the clothes.
Oh, it looked like it looked like a decrepit old grandmother. It was so gross.
It's like that old monster from Tales from the Crypt.
Get the full scoop by checking out the archives at tastylive.com.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Got the need for speed? No problem!
At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We just ripped higher up to 50 points, and I just thought we would stay there, but
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Oh, yeah, it's Wednesday, April 2nd, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And good God, did we just get some new and glorious incentives. Happy Liberation Day, Christopher.
You mean Obliteration Day, Victor?
Zing.
We did it. Everyone snap.
Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of this little chat in the middle of your screen, there's only one place you can do it, and that's on Tasty Live's YouTube channel. So head on over to Tasty Live. And start bashing your phalanges, your metacarpals, and maybe even your skull into your keyboard. Type in random ass characters if you have to. Just spoof the Google algorithm into putting us in front of as many people as possible. Shout out to all of you in the chat. I see you. I love you. My heart goes out to you. I would talk to you, but we got the big brain in the house, Mr. Chris Vecchio. Chris Vecchio, my friend, do you feel liberated? Do you feel liberated?
My gold positions feel liberated. My silver positions feel liberated. The bonds that I hold feel liberated. That 5,800 2 DTE call that I purchased 10 minutes before the close today does not feel liberated. But it's a small loss. It's a small loss.
The interesting thing about today, cash closed higher, a little move to the upside. S&P during the regular hours up 2/3%. The Nasdaq up 0.75%. The Dow Jones, your grandfather's favorite index, up 0.5%, and the Russell was the massive outperformer, up 1 2/3%, on a really sort of interesting positioning into this April 2nd tariff announcement. I am fascinated by the announcement. I think it was, me personally, I thought it was a way lighter touch than I expected, and I think the market reaction is fascinating because it's almost the exact opposite of what you'd expect. I'd argue the market had already positioned for a 9 to 10% tariff, which means 3 to 4% downside, which is where we are now. The S&P down 3.5%, the Nasdaq down 4 and 1/3%, the Dow down 2.25%, and the Russell got obliterated, down 5.25%. No one thought April 2nd would be a clearing event. Volatility was not positioned for it. And lo and behold, if you're not positioned for it, you don't think it's going to mean anything. Guess what? It means something. The law of reflexivity. Chris Vecchio, what say you about the announcement and about the reaction?
Let's rewind. It's 2016. I am very much against Brexit because I think that in a world of a growing pie, cooperation serves everyone's interests. But the UK decides to Brexit. It also means that the scotch and gin that I like is pretty much exempt from the highest tariff levels now because the UK is only being tariffed at 10% compared to the EU at 39%. So thank you, Islay Scotland, for your botanist and your Lefroy. And that's the only silver lining that I find through today, Victor Jones. I'm going to sound a little maniacal and perhaps obtuse when I suggest that Pax Americana may have officially died today. One of the things that bothers me about this entire conversation about the U.S. losing its manufacturing share since World War II is that's a really fascinating starting point to begin from. Why did we have such a big manufacturing share in 1945? Because the rest of the Western world was obliterated because of World War II. So naturally, as those economies rebounded over the following years, their manufacturing capacity would build back up. Why do we have the tariffs in place? So that we, as the new global empire, could have all of these client states where we help them have access to our markets as they rebuilt in the shadow of World War II. And we built up a global economy that worked in a competitive but cooperative fashion. That ended today officially. Now, we can talk about bringing jobs back here to the United States, but when we look at the historical data, when we look at the studies that have been performed by independent, nonpartisan think tanks, hell, the Federal Reserve itself, tariffs that are done in such a nature do not bring jobs back into the country at all. They never have, they never will. And yet we are pursuing this policy for what reason? The numbers that were listed today, I was trying to work out the math for how they arrived at these tariff rates. I'm pretty sure it's just the trade deficit divided by the amount of stuff we import from that country. If you do the math on the EU and Vietnam and China, you're going to get those numbers within 1% or 2% for basically every single country. And the numbers that they use to talk about the tariff rates they impose on us is basically a non-GAAP EBITDA adjusted figure. So this is worse than I think anyone expected. It's worse than I expected. Otherwise, I wouldn't have bought that 2 DTE 5800 call. That's now worth nothing. It's worse than expected in almost every regard. Now, there are some wrinkles to this that make a lot of sense. Like, why would you employ an equal rate across the board, maybe even hit Vietnam more than China? You can make the argument that China's been using Vietnam as a pass-through in recent years to circumvent our tariffs. I've made that argument here with you before about NVIDIA GPUs, about how NVIDIA has been selling on a quarterly basis enough GPUs to Singapore that the entire annual rate of electricity production in Singapore would need to satisfy. So clearly they're not just holding on to them and warehousing them, they're passing them somewhere else. And then you have all these AI breakthroughs in China. Like, let's just connect the dots there. So you have to have some sort of rate that doesn't allow China to say, oh yeah, you're going to give us 34%. We'll just set up a subsidiary in Vietnam and we'll use that Vietnamese company now to sell to you with the 10% tariff. So you have to do something with that. That's understood. But this form and fashion today, arbitrarily, why are we Falkland Islands or some of these places in the oceanic region, 60, 70% tariff rates? Because what on earth are they going to take from us? We're an advanced economy. They're not going to buy AI or airplane parts necessarily. And they do textiles, so we buy cheap cotton goods from them. Of course there's going to be a trade balance. I think that the root of this is that people think the trade balance is the same thing as the budget deficit. And it's not. So I'm personally perplexed. I'm grateful that I've been hiding in bonds and gold this year. I am angry at what this means for the short-term and long-term implications of the economy. It's disappointing. It's not going to achieve the stated goals that it wants to.
Tom said this to me the other day. I put it out on Twitter. I fundamentally disagree with everything you just said.
I know. But most of the market does. Nasdaq's down 4.4% right now here from the close yesterday.
Okay. So long time ago, I think being right for the day could mean that you're wrong you're missing the opportunity and you'll be wrong for tomorrow. So being on the side of the 4% sell-off kind of means you're not going to take risk. It means you're not going to look for opportunity, and you're not going to be there for the swing. So let me ask a set of questions. I'm being hyperbolic. I don't disagree with anything, most of what you just said. I think it's a brilliant way to open the show. But I would ask the question: where is the opportunity? Putting your personal feelings to the side. Mm-hmm. I think the most important question today isn't whether you agree with it, whether you don't agree with it, whether you understand the logic or don't understand the logic. I would have argued that to come out light, it's not his style. It's not his style. You can't. I think you come out heavy, and I think they want this to be at worst like a month-long negotiation. I think they want to get a bunch of deals done within the next couple of weeks, and I think a worse than expected announcement puts a lot of people under pressure. This is the opening move. The question now is, how does everyone else respond? Do they respond like our friend from, is it Ontario? Where's Doug Ford from? Is it Ontario?
Ontario Premier. Yeah, the Ontario Premier. And they're important because they have the Ontario Liquor Board, which is the single largest body of liquor purchasing power in the entire world.
You've really got your eyes on this liquor situation. I think it's important. Do people respond in that way, which is, hey, I'm willing to take off all of our tariffs if you are as well? Do you get more of that, or do you get more of the Mark Carney type situation, or the China and Korea and Japan all teaming up for some sort of reciprocal tariffs? I think it's a big question, and I think that's the unknown. The unknown here.
Well, I say, Victor, we have countries that are still arguing 80 years later about the rape of Nanjing. And all of a sudden, what Trump is doing is enough for them to say, we should set that all aside. We haven't been able to get over this for 80 years, but this is so important that we need to work together.
Yeah, money is a wild motivator, bro. So then I would ask you, we know now that we're on the other side of the announcement, we know it was worse than expected, but we have an answer and we have something to operate on. What happens from here? Where's the opportunity? You're instantly down 4 or 5% in these indices. You're instantly back at the value area at 5,500. So the question becomes not whether you like the tariffs or not, because they're here. So the question becomes, where's the opportunity at this moment in time?
Yeah, I mean, that's, bonds have rallied, 5 points over the past 5 days? That's a hell of a move. So the opportunity may not be there, but ultimately the opportunity is probably still in the recession trade, which, going back to 1980, the two best places to hide during recession fear episodes have been the long end of the curve and gold. That's been a point I've been making for weeks and months now. Stocks trying to pick a low here hasn't worked out. I've taken 2 swings. I did the short put spread on March 14th, which I'm still holding and is eating dirt right now. The long call spread was a small penny. I think that's like a $200 wipeout. I was happy to flip that and take the risk today, given all the other more defensive positioning I had in case I was completely wrong. I came into today with absolutely zero conviction. I'm usually a strong convictions held loosely kind of person. I have been a zero convictions held whatsoever coming into today. I used the opportunity to roll out all of my exposure because I didn't want anything that was too close to 21 DTE. And that effectively was rolling out long gold calls to deeper out of the money so I can get some convexity, rolling out the bond put spreads or the note call spreads. And so on the other side of this, I'm not mad today because I lost money. I made money today. I'm going to make money after this. I'm not worried about that. I'm more concerned with the fact that now I'm right. I don't want to be right, Victor, because I'm defensive. I like being bullish. I like when people get in the chat and say, you owe Ilya an apology because the market's down 1% after rising for, 60% over the past 3 years that I've been long. I like being that person. I don't like being this person.
You're a bear or a bull coming into today, Chris?
I was indifferent coming in today. I had no effing clue. When I say I felt like I had zero edge, that comes from a place of deep honesty. And
you're right about what? You're right about a recession on the horizon, a growth scare? You're right about buying gold or bonds? Or what were you right about?
I think I'm right about the recession, right? These tariffs are much more aggressive.
Meaning you are calling for a recession this year.
I think in the very short term, between 1Q and 2Q, the odds of a recession are north of 50% at this point.
Okay, but that everybody.
No, but you
that's
have
implied in the market.
I'm speaking to your tweet that I think that you have pinned that says anyone who knows how Enber calls recessions is something, and that feels very personal, sir. Because you know that I know how Enber calls recessions.
so you think that's like some dig towards you?
It feels like a dig towards me.
What that means is, no, not at all, bro. Not at all.
I know. I'm joking.
So, like, the point is, people on Main Street start hurting well before the NBER calls a recession. You can talk to a stripper at the strip club, and they'll tell you people have stopped coming in and spending cash. I did that at
NPR recently.
Well before the NBER comes in and calls a recession. So that pinned tweet obviously has nothing to do with you. It has everything to do with just normal everyday people can tell you the state of the economy well before the NBER backdates a recession by 3 to 6 months. It's not helpful. That's my point.
Yeah, it's not helpful, right? But when real time, you see something like the Atlanta Fed growth tracker minus 3.7% for Q1, even when you take out the gold imports, it's still deep in negative territory. And it's the impulse, right? Forget the fact that you're still seeing some hiring data hold up like what you see in ADP. The sentiment surveys are pointing to consumers and businesses that are pinching and getting ready to pinch their wallets. Okay. You and I, last week, I said how many recessions start with a surge in imports. But this also may be a period where we're going through a regime change, economic regime change, right? From classical liberalism to Keynesianism to Thatcherism, Reaganism, right? And that's really where we are right now. People refer to this as the neoliberal era, okay? You have classical liberalism pre-World War II, and now after Keynesianism dies, you have neoliberalism. So neoliberalism may be dead. I think that's what today means. This neoliberalism era is dead, and that completely informs how we should be trading short term, which is there is a negative growth impulse for the U.S. Consumers and businesses are going to look at this data. I'm half a mind to go out and buy a car tonight after the show ends, right? Go to Target and get underwear and socks, because who knows what the supply chains will look like in a few weeks if there's going to be any disruption there. But then very legitimately long term, if we're going into a growth slowdown, because these tend to be adjustment periods, the tariffs hit, you get a ratchet higher in growth, you get a ratchet higher in inflation, you get a hit to growth, and it's like a J curve, right? Growth goes down fast and then it recovers, inflation goes up and then it comes back down. That's why the Federal Reserve treats the inflation spike coming out of tariffs as a one-off event and not something structurally that they need to actually address. They're more concerned with the bottoming of growth and the rebound to a lower state than where it was previously. So lower rates seem very likely, right? The Fed right now is going to give us 5 cuts to the end of next year. I wouldn't be surprised if it's 7. And bonds at 120, they feel a little rich right now. But if the recession trade is on, again, gold and bonds have been the place to hide during recession fears in this market. So I think we're going to be looking for a wipeout. I think a wipeout move in equities probably means 5,300 in ES, maybe 17,300 or so in the NASDAQ. And then I'd be very comfortable getting long down there.
At what level, you said?
Like 5,300 in the S&P and 17,300 specifically in the NASDAQ.
I've said this, I don't know what it is about this environment, but I don't know if I have the right mental model or the wrong one. I'm just not as spooked as everyone else is. I'm not as convinced that I should be freaking out. And maybe it's just because I have this, these ranges, that 6,000 plus or minus 200, and now I'm at 5,500 plus or minus 300, and it hasn't failed me. We're playing right around that fair value level, and I'm not freaking out. And I've also learned to be really careful about over-rotating my narrative in a high vol environment, when the distribution curve gets wide. And I should expect 1.5-2% moves. Now, this is a multi-standard deviation move, what's happening right now. But this is also an initial knee-jerk reaction. So give it 24 hours. There's a part of me that I don't know, maybe I'm dead inside now. I've been doing this so long that I'm dead inside. But I'm going to be really careful, Chris, not to over-rotate my narrative, not to get too hyperbolic, to recognize that I'm still at 5,500 playing plus or minus 300 poker, and somebody else just made a big bet. And I can either freak out and fold my cards, or I can stay in here, hang tough, and play the hand. And there's nothing about this move. Again, it's a big move. It's a big bet. But we're still right at 5,500. And I don't know. I'm just not. I'm not freaking out. And I'm looking at vol at 21.5 with forward VIX futures at 23.5. I can make the case. We are in a bit of backwardation. Don't get me wrong, but I can make the case that this wasn't a volatility freak out either. Your thought?
Yeah, no, the volatility didn't freak out. In fact, that's the one. Give me a second here just to pull that up on the chart. Did we even get through the highs? No, I don't think we did. 311 high is 23.97. Today we did 24.05, but we're currently sitting at 23.60 in the VXJ contract. Yeah, I mean, listen, like I said, when I'm freaking out, I didn't lose money today. Most of my positioning is in bonds and gold. I'm fine. It's been fine. I'm thinking about now, as someone who wants to be bullish in stocks, this is bad for corporate earnings. It's bad for corporate earnings because corporate earnings growth in the first quarter already started to slow down. We had double digits growth in Q4 2024. We're now looking at about 7% and change for Q1. It also comes with more companies than last quarter, any quarter in 2024, any quarter in 2023, revising down their EPS estimates. In fact, the number of companies that have thus far produced the estimates, more companies are revising lower their EPS estimates than the 5-year and the 10-year averages for the S&P 500. Okay, so contracting earnings growth and an economy that looks like it may have to price in the possibility of a sudden stop, that's very growth negative, right? It's the mirror image. Why was I so bullish last year? Corporate earnings are growing. The economy is growing between 2 and 3% in real terms. As long as you have those two things happening, everything's copacetic. Don't worry about it. Just buy the calls and go fishing. But now you're on the other end. And so this is still sell the rip. It's not buy the dip. And I made that mistake today. I tried to buy a dip in stocks, and it's a small loss. It was like a 3-to-1 reward to risk. So I think I'm going to be out like $300 on the trade altogether. I can eat that given how the bond and gold positions have performed over this week. But like that's where we are now. That's the regime. If we've now shifted into a regime of lower growth and the aggressive part of the J curve where you fall off, then bonds are a fine place to be right now, and volatility doesn't need to spike. I think that's probably the most difficult set of circumstances for people. You get a 4% move lower in the NASDAQ and you get a VIX at 30, okay. But to get a VIX that sits around like 22 or 23 with a 4% sell-off, that sucks. That's really difficult to trade. And that's part of my rationale. It's difficult to trade. I don't feel like I have an edge.
My wife asked me last night, because I'm in Singapore, which is 13 hours ahead of Central Time. She goes, what do you every once in a while, she'll ask me a question about something she thinks is market related or in the ballpark of something I'm focused on. Most of the time, we don't talk about any of this shit. She goes, what do you think, what's happening? And I go, they're going to take a little bit of money from us and they're going to spread it around. She goes, how do they do that? I go, it's complicated. She goes, all right. I said, she goes, that kind of seems fair. I go, yeah, I think it is. And that was the extent of our conversation. Chris Vecchio, do you think that's a fair character?
No.
Do you think that's a fair characterization of what's going on?
Who pays the tariffs?
That wasn't. It's a consumption tax. I've said this before. It's not about who pays the tariffs, which I think is which is what many people focus on. What I think happens.
But Victor, who consumes the most then? Do lower income people spend more of their income on consumption or savings? This is a regressive tax that is going to hurt the lower and middle income consumers more than higher income consumers, because higher income consumers spend a smaller proportion of their disposable income on consumption, right?
I'm actually glad you brought this up. This will be probably one of the most interesting things we talk about. You're 100% right. Somebody on the lower income spectrum has a lower marginal propensity to consume. Somebody with higher income or higher levels of wealth has a lower marginal propensity to consume or to spend. Meaning, you give someone on the lower income spectrum $100, the likelihood that they spend that $100 or even more is high. You give a wealthy person $100, the likelihood that they spend that $100 is low. In fact, the most likely use of that $100 to a wealthy person is to invest. It's most likely going into assets. I agree with you 100%. However, when you go through a period of massive inflation like what we just went through, and prices are already likely at some sort of elevated level where it's becoming difficult for companies to pass on prices on especially consumer discretionary goods. We've sort of reached this point where it's really hard to saddle higher prices on the consumer without them decreasing their consumption. Would you agree we're reaching this stretching point? There's not much more room on credit cards or additional unsecured debt. I mean, we've got buy now, pay later on fucking Domino's pizzas right now. Like
we got burrito bonds, baby.
So then what happens if you get this big ass fucking, excuse my language, what happens if you get this big ass price shift right at the point where the consumer's already stretched? You get a change in behavior, Chris. Mm-hmm. So what I would say is, yes, it's regressive, but what we can also see is a shift in the demand curve. And I think what's very likely to happen, what has happened in the past is we said, okay, we have the printer, you guys have raw goods. We're going to print stuff. You guys can have the jobs. We're going to take the cheap plastic trinkets that you guys make, and we're going to send you this funny money, and you're going to send us the cheap plastic trinkets. And I think what happens here is we go, you know what? We don't need as much shit. We don't need as much cheap plastic trinkets. And in exchange, we get a little bit more employment. I think we get a little bit stronger labor force participation than we would otherwise. And where does that come from? It has to come from somewhere, and that's going to be funded by lower profit margins. It's going to be funded by lower stock prices or lower, like if we wanted to solve the housing crisis, you solve the housing crisis by building 4 or 5 billion homes. What happens if you build 5 million homes? You get an excess of supply, which is going to have an impact on all current homeowners. It's going to take from their equity. So what I was explaining to my wife wasn't about who pays the actual tariff. It's about what's going to happen to all the assets that we own. On the flip side of this announcement, those assets are going to be worth less, and that in effect is going to be redistributed. And that was the nature of my question, which is, do you think stocks going higher undermines the administration? If the markets rip, would that undermine the administration or would that aid them? And I would have argued it is not helpful, because what they're trying to do is redistribute some of what's on paper into the real economy. Go ahead, sorry.
Well, yeah, that's from our Twitter conversation yesterday, so I have to make good on my promise. In a world where manufacturers, which face small margins already, now have this higher input cost.
Yes.
Do we think that these manufacturers are going to open or are going to be able to expand production and hire more people, or will they be forced to let go of employees as a result of the higher costs? We already heard from the National Association. Forces. The National Association of Manufacturers put out a report today, and I'll zip this back up. I don't want to distract everyone. The National Association of Manufacturers put out a report today that this is going to cost jobs in the country net. The industries that are being protected will gain employment, but everyone else will lose. So unless you currently work in a factory producing textiles, congrats. Like, your job is probably safe because Americans don't have access to $2 shirts from Vietnam. We can buy American apparel for $20 made in Los Angeles. But everyone now who consumes the T-shirts is now paying $20 instead of $2. And so incrementally, think of this like gasoline. When gas prices go up, why does that hurt? Because it means we have less money to circulate through the economy otherwise. So falling gas prices, it puts $50 back, $100 back in people's pockets, every single month. and you multiply that out over the course of the year, it can be a few $100 in additional spending going elsewhere. We literally don't need to buy something and use our money to light something on fire, right? Because once we buy gas, it goes up in smoke. That's kind of like what the tariffs do. We're going to have to use more of our money to pay for our basic goods. And so we're going to have less money to circulate into other parts of the economy now. It's just that simple. And yeah, we're going to be able to get all the things that we want to get still. I'm still going to get T-shirts. I'm not going to run to Target after the show and go buy underwear for my, future newborn and my daughter until she's 9 years old and until the next administration comes in and undoes this entire mess. But at that point, how much credibility we have taken? Will other countries even want to deal with us? I say yes, but not on the terms that we had prior to 2024 or 2025. But it just means less disposable income floating through an economy, and it means a lower velocity of money. And so perhaps you get lower inflation out of this. No, they get not necessarily, but perhaps you get lower inflation out of this. Mm-hmm. But the immediate effect is that people stop spending money. And so then the jobs that you ultimately do we really want to be building microwaves in America in 2025? Is that really the goal here, to bring back those kind of jobs? This is also like the whole.
Go tell that to the homeless people in the streets of Chicago. Do we really want to be building microwaves? I think any job
that's a disingenuous. That's a disingenuous argument.
No, it's not. I'm dead ass serious. Any job that gives somebody a sense of purpose, a sense of pride, allows them to earn money in the economy as opposed to get a handout from some government or some
work is dignity.
Some organization is a job that anyone would be proud of. And I would argue to you that 61% labor force participation and sliding is a problem we need to address. So I hear you on all of the issues with tariffs. I get it. Everybody who understands the difference between tariffs and free trade is going to come down on all of our stocks will go higher if we stop doing this nonsense. But then I ask you, Chris, what exactly is your solution to the millions of people sleeping in tents on some of our greatest cities right now? What is your solution? Because I hear a bunch of people on the left side of the aisle criticizing what's happening, and I saw none of them doing anything about it as we slipped further and further into just complete chaos in Chicago, in Denver, in San Francisco, in LA, in New York. All these places are run by Democratic policy. So I ask you, my friend, if you don't like what's happening, and I can sympathize and empathize with that, but what is the solution, and why isn't anyone on the left side of the aisle doing anything about it with the levers of power over 16 of the last 20 years or 12 of the last 16 years? What's the solution, man? Because anybody can be a Monday morning quarterback, but it takes real balls to sit in that chair and go do something about it. What's the solution, man?
We could just raise taxes.
We could.
Instead of having lower income people pay more to consume the basic necessities of life, we could just tax the rich. And this is the exact problem that we have with the homelessness problem on the streets of New York and Chicago, Victor. Instead of building more housing and investing more into social services, and instead of providing the things that people need, like job training programs, we didn't. And so what did the people on the left do? They said, you know what? We can't actually address the structural issues here. So let's make it okay to be poor in public. Let's allow for social decay because we have failed to help them. So you know what you do? You build more housing. You do jobs programs. You get people not into college, but into apprenticeships. In my county here in Westchester, north of New York City, for every 5 plumbers retiring, there is 1 person to take their job. Electricians and plumbers right now in my county make more after 2 years than a college graduate after 4. Okay, so we have to change the incentives, as you say, incentives guide outcomes. We have to change the incentives here and not hold out, a 4-year college degree as the end all be all. But the reality is we have the ability to solve these problems. We don't. And so both parties go into the pits of, we can't build more housing, so the homeless should be able to do whatever the hell they want. And, we can't solve the budget deficit things, so let's raise tariffs because it's an anathema to tax the rich. We have some of the lowest tax rates in the world. Forget the tariffs. We should be doing a destination-based tax.
What does that mean? What do you mean?
That means if companies want to sell into the United States, they pay taxes to the U.S. government, right? If you're in Ireland, Google can't just, or some pharmaceutical company can't just re-domicile in Ireland and pay their lower taxes. Yeah. You want to sell your pharmaceuticals here in the U.S., you pay U.S. tax rates. It doesn't matter where you're headquartered. So we got to close those loopholes. You want corporations to stop taking advantage of the system? Stop giving them loopholes to operate out of Dublin, for example. Go after the abusers of the system. And look, I don't know if you saw today, Lena Khan was with Steve Bannon. Okay? Like, you need people.
I think Lena Khan was incredible.
Is great.
She's amazing.
Fantastic. You need people like that who are trying to address the antitrust issues in the country. And I really thought this was a place we were going to go a few years ago, when you had the left, which thought that monopolies had too much power, and you had the right that thought the tech was abusing social media, right, and censoring free speech. And so there was a genuine hunger to address these absolute, monoliths, these Goliaths that have grown in a Google and a Facebook and a what have you. And instead, both parties have been like, how can actually we get them to work for us? How can we control the beast and put them in our camp? And it just leads to worse and worse outcomes for your everyday citizen. So instead of embracing a zero-sum mindset, right, we got to get back to building. We got to get back to. I've been talking with, how I do in my free time. I talk to a lot of political people. I've been stressing the fact that if you're an elected official,
I know some of what you do. I know some of what you do in your free time. Quite frankly, I'm scared to know anything beyond what I know already.
You know about the adrenochrome and the.
I know you hang out at schools a lot. That's the extent of what I know about you.
That's true. You did put that on me. Yeah. Well, revenge is a dish best served cold, Victor. So I have something coming in for you. You wait for it. You'll be just walking down the street.
Before you continue, let me quickly respond. I agree with you 1,000%. And this is why it's so difficult. It's like we are talking about all the nonsense except the one thing that will change the incentive structure of our government and put elected representatives on the side of the people. And that's changing the incentive structure. But if I pay to get you elected, what is your incentive to turn around and go tax me? And by the way, this is a problem on both sides. Joe Biden in March of 2022 announced a wealth tax of 20 or 25% of people's wealth. It was all bullshit. It was a press release. It never went anywhere. You can go find it on the White House's archives. It was all bullshit. He announced this thing. He said he was going to do it. He announced it in March of 2022 in the middle of a stock sell-off, and it never went anywhere. And furthermore, there is an apparatus around our government that is purely there to suck taxpayer dollars, to lobby the government and suck away these taxpayer dollars, Chris. So my biggest issue with the wealth tax isn't that we shouldn't do it. It's that the current structure would be you tax a bunch of wealthy people and you're going to redistribute it not to people and not to services, but to a bunch of blood-sucking apparatus that is already structured to lobby government money away. And so we're going to redistribute it, but not to services that where we actually need to go. So on one end, I believe we do actually need to make government and government services more transparent first and more efficient. So it's like being in a boat and the boat has a bunch of holes in it. You don't go ask for a bigger sail, which is the wealth tax. You fix the holes in the boat first. Then you go get a bigger sail. And I think what's happening right now, is Donald Trump going to be the one to enable a wealth tax? No, 100% he's not. But if he wants to fix the hole, anybody could, but nobody does on both sides of the aisle. If he wants to fix the holes in the boat, that's fine. But the only way that the people are actually going to get a wealth tax or a billionaire tax is if they actually stop being divided as a people and go pressure their representatives for it. No benevolent leader is just going to step into that White House after being funded by billionaires and millionaires and then just go, I'm going to tax myself, all the people that got me into this office, and all the businesses that helped me to get elected. It's not going to happen unless there's public pressure to do it.
Yeah, but that's what these crises produce. Every time that you have, how should I say this? I have a working theory about left politics in America. America is naturally a center-right country, okay? The Republicans are the daddy party. The Democrats are the mommy party. Democrats make strides when there's a crisis. You see it with Obamacare. You don't get the Affordable Care Act until people lose their health insurance en masse in 2008 and go, you know what? Maybe having an option besides my employer is a good idea. You can either make social progress when there's something really bad happening and people say, you know what, the system isn't working. We need a new, fresh idea. Let's try something different.
To be clear, you think the Affordable Care Act, you think that's on balance, you think it's a net positive right now with the benefit of hindsight?
Philosophically, I think that having a public option is the right thing to do.
Philosophic, sure. I'm not talking ideology right now. I think you and I both agree on ideology.
Yeah, implementation hasn't worked out well. I think it says a lot that healthcare companies in the United States have outperformed the S&P 500 since the Affordable Care Act was put into place. It helped ingrain monopolies, in that regard, and it creates.
You just made a statement that was based on a false pretense that the Democrats make progress out of crisis, and you used an example that
that's not at all.
Came back and said it was an actual net negative. Ideologically, it's progressive.
No, it's not.
In practical terms, it's not.
That's not what I'm saying at all.
Okay.
Obamacare, Affordable Care Act is a net positive. Period. Full stop.
Okay.
Right. The implementation obviously didn't work out smoothly at the very beginning, and costs for people's insurance, private or public, have risen more than expected. But having more people insured for being the wealthy country that we are, I think is a good thing. I think when you look into communities with higher rates of health insurance, you actually see higher economic outcomes. You see lower rates of unemployment. Why? Because there's
if you're
stability.
Insured, but you can't afford the cut. This is the problem that we're in right now, my friend. It's like we're talking about like real circumstances. If I'm covered and I can't afford the copay, or I can't afford my upfront cost, I'm not really covered. I can't afford the medical costs that come along with my coverage. Am I covered in that circumstance, or am I not? Because I see a bunch of people that might have some sort of coverage that can't actually afford healthcare, and they go to these clinics, or they're wrapping their own arms instead of going into the doctor. Yeah, bro. I see a bunch of people getting into apothecary and eating honey and lemons versus actually going to the doctor, man. If you're covered and can't afford the care, are you actually covered?
I think that everyone should be covered. I think that we are a country that can afford the coverage. I think that we need a public option. So do I like the Affordable Care Act? No, it's not as far as I would go. It's incomplete. And, I'm not do you want to go as far as Medicare for all? Like Medicare for all we as people, as taxpayers, would spend less money on healthcare annually if we had Medicare for all than what we currently have. So if this is purely about cost savings, then why aren't we going all the way in that direction? And then you point to Canada and the UK and say, there's no real perfect healthcare delivery system. And I actually think if you take a step back, there are people on Twitter who is, I think it's a she. I think she outed herself on a podcast recently. Cremiu. It's like an old man with a taupe or sepia filtered picture that looks like it's from some Voltaire cartoon. Anyway, Cremiu. It's interesting. No, seriously, interesting follow. Like data analyst, leans center right to the right. But one of her recent posts yesterday was about healthcare expenditures and healthcare outcomes. And the data basically shows that there's not really any country on earth that has fully figured this out. There is some balancing act where you can have very high quality care at your fingertips on demand, but it's going to be super duper expensive. And there are countries where you have widespread care available to everyone, but if you need a specialist, it's very difficult to get a hold of them. And there are countries that have tried balanced approaches in between, and they have some moderate levels of success, but not everything is perfect. Our system is far from perfect. It's very expensive, and also you're not getting timely care. So are we really happy with it? No, I don't think so. But I think that there are, I think a lot about FDR's April 14th, 1938 fireside chat, when he was talking about why the Western world was sliding towards authoritarianism and fascism. And he made the point that when people don't have the ability to feed their children, they are willing to give up liberty for everything. Correct. And he says 100%. That people want 4 freedoms. They want the freedom from fear. They want a freedom from want. They want the freedom of speech, and they want freedom of worship. Okay. And so I think having healthcare helps achieve those 4 freedoms.
I agree.
And I think that if you want to build a robust society, then you need to give people, I don't believe in equality of outcomes. but I do believe in equality of opportunity. And that means
I think you and I, in many cases, we have the same. We are directionally very similar ideology, and it's just implementation. And I'm calling out that I think, from an ideological standpoint, I think the ACA is directionally right, in my personal opinion. The problem is just government has a really hard time fixing these types of big problems, and mostly because of the amount of trade-offs they have to make, right? If they wanted to fix the majority's problem, they could do it. But politics is about negotiating the majority and the minority, capital and labor. And you stick enough stuff in there that benefits labor, and then you end up with this monster that doesn't actually end up solving the original problem. It just creates new unintended consequences, which is what I'm speaking to. Chris, this has been a fascinating conversation, but I don't think we've answered the core question here, which is, we have an S&P on discount. We got a NASDAQ on discount. We've got a lot of the Mag 7s that are now at, actually, give me just a second.
Did you hear his comment today? Did you hear Besant's comment after hours today? He goes, a Mag 7 problem isn't a MAGA problem. This thing's going so much lower, man.
But I think Besant's been really clear. I mean,
No,
Besant has been.
I'm never listening to a single thing he says again.
Why?
He said that we're going to get a cap on these tariff rates and they're not going to move. And that's just not what Trump told us today at the press conference.
I wouldn't listen to him on tariffs. I think Trump drives the tariff negotiation. But in terms of he's been super clear about where his focus and the administration's focus is, which is bond yields, and it's not on stocks.
What's going on with his 3-3-3 plan that he talked about so much over the past few months?
I think he might get. I think if he gets 1 out of 3 of those 3s, I think we'd be lucky.
Yeah, we'd be very lucky.
So I think when he said that, I think people are like, "Oh, okay, we got a plan. That sounds good." I'm like. So Ray Dalio was in Washington last week, I think, trying to get bipartisan support for this idea of 3% deficit to GDP, which we're at 6%. And I'm looking around going, does anyone know the pain that comes if you're going to try to cut these deficits in half and you got bipartisan support for that? That means defense spending in an era of hyper aggravated geopolitical tension. That means cutting services at a time when people are hurting out there. This is going to be painful, man. And then 3 million barrels of oil or whatever there's 3 on oil was. We're already pumping max, bro. How exactly do you presume to do that? And then the 3% growth. How?
Yeah.
How?
We were already doing it. We were already doing it.
And you're cutting government spending, and you think we're going to just magically go to 3 because of a tax cut and 75 basis points in monetary policy easing? Not happening.
Well, that's what makes these tariffs and the implementation timeline so troubling for me, right?
Okay.
It's when's the best time to buy flood insurance, Victor? When it's raining or when it's sunny out?
Mm-hmm.
Along that line of logic, we see consumer default rates, if it's for auto loans or number of people who are falling behind on their mortgages past 30 days, those numbers are going up.
Yep.
Right? If you really wanted to implement the tariffs here, you have to do it in a way where you have an offset, where you have a monetary offset, where you have, dare I say, stimmy checks. I know that's something that we did in 2020, but if you really wanted to do the tariffs then, Trump could have done this in April or May of 2020 and no one would have noticed because everything had already stopped. And so by the time that things were restarting, people are already looking for the differences in the supply chains. They could already source the goods because they're starting from zero. They're not starting from.
If you wanted to see if you wanted to see the Great Depression again, throw on tariffs at the exact same time the supply chain is shut down.
But you know what the difference is? You had 0% interest rates and you had stimmy checks going out to people, and the savings rate was through the roof. So people had a lot of disposable income to offset whatever cost of living increase there would be with this. And if you think about the number of people in the country and the number of spenders and the amount of money that the government wants to raise from this, tariffs are paid by consumers. And so this would cost about every family $5,000, right? So if you're going to incur a $5,000 cost onto a family, do it at a time that you can give them some monetary offset. Give it when you can give them some stimulus checks. Right now, you can't do that. So you're going to go into a period where consumer delinquencies and defaults are going up, and now you're going to have an additional layer of burden. You're putting more weight on top of their shoulders at a fragile point. It can lead to a disruption in the system. It really, really can. Can this be done in a manner that I think Trump talks about? Yes. Is what he is trying to achieve, is this the way to do it? No, not at all. Not whatsoever. And the fact
so let me
that
ask you this question. How could you be wrong? Where in your thesis and thinking could you be wrong? In other words, how can these events unfold to potentially put you on the wrong side of this?
Give me a country that's here by the end of the week that has negotiated a walk down from these tariff rates with the Trump administration. Exactly. I need to see and hear. I have been you know how difficult this is for me. I struggle to separate my political brain from my trading brain, although maybe I didn't this year because I've basically been long gold and bonds all year long. And I've avoided stocks for the most part. So maybe I didn't separate them. But I'm having now a very difficult time separating those two things. I'm kind of throwing my hand up in the air and saying, if this is really what you want to accomplish, why would you do it in this manner? Right? Like this, it seems like we're just swapping out Democratic Party elite for Republican Party elite. The deficit's going to be going up. They're looking for a $4 to $5 trillion expansion in the debt limit as part of the tax plan. There's no balanced budget coming. Fiscal year 2025, we spent more money than we did last year. Okay, what impact did Doge have? Besides disrupting things and making Elon Musk highly unpopular and potentially costing Republicans a seat in the Wisconsin race. Because, by the way, there were two statewide races in Wisconsin last night, and the one that Elon Musk threw all of his money behind, the Republicans did worse there. So, like, what are we doing here? Like, what is this actual stated goal? I see a lot of chaos, and it's not actually going to achieve what we want to achieve.
Okay, so in the case where
how would be wrong? How am I wrong?
Yeah, so
give me companies.
It's a two-part question.
Countries. Yeah.
How could you be wrong? And in that case, what does well first? In other words, where would you want to be positioned in the case where you get a bunch of people to the table, where this Nixonian madman strategy actually works, and other countries, instead of banding together, again, which I think is a 50-50 coin flip, I think this could work out very bad. If other people band together against the United States in retaliation, that's the worst case outcome, because then this could either spiral horribly to the downside and people trying to get the upper hand, or we capitulate and we get left out in a very weird position. So assuming that's not the outcome, assuming you get people to the table to negotiate, where would you want to be in terms of stocks or sectors or industries or companies? Where would you want to be?
If companies come to the table, or rather countries come to the table, countries come to the table to do this, then we drop the tariff rates down, don't we? So then why would any company change where their goods are manufactured? Mm-hmm. So those jobs aren't coming back to the U.S.
Well, I think that would be part of when they come to the table, you would have some sort of negotiation. And that negotiation, I'm guessing, would be a shift in manufacturing in exchange for a lower tariff rate, right? Otherwise, why would you lower the tariff rate?
So the EU is going to come to the U.S. and say, listen, we don't want this tariff rate. We're willing to order BMW and Mercedes to stop producing cars in Germany and start building them in the United States?
No, I think the way that I'm thinking this through, and again, I'm not saying this is my desired outcome. I'm trying to be objective and try to understand what the full range of outcomes in the distribution curve are. So let's say some country X has an already existing tariff on some American good of, let's say, 150%. And they just got slapped with some giant tariff, which is going to prevent them from getting to the demand of the world's most feverish consumer. And so perhaps they don't move manufacturing jobs here, but they lower their already existing tariff on some American good, which then makes it easier for investment in America for distribution overseas. That could be one potential outcome. or it's an exchange for investment in America. You invest X amount of billions of dollars. You go on television with me in front of the American people and announce this, $10 billion investment. In exchange, I'll lower the tariff rate. I could see a lot of that stuff happening. I think those are the potential outcomes.
Again, so the German chancellor gets on TV with Trump and says, we're going to direct German companies to invest X billions of dollars a year in the United States and not produce this stuff here. We're going to take jobs out of our country and put them back into yours. Is that a political winning message for a politician in their home country? We're going to take jobs out of our country to give them back to the United States. Do you think that any politician is going to get reelected on that platform? What's the incentive there for them to do that, play that game? That's why China, Japan, and South Korea coming together to work in cooperation, to me, is a red bell that shows that this is not the United States throwing around its economic weight and demanding the rest of the world play by our beat. The rest of the world is saying, yeah, we can do this together without you. And that's when this falls on its face flat. That is a red flag. Again, we talk about, Trump talks about us being taken advantage. I mean, he said in his opening remarks, the United States has been raped by its friends and allies and enemies for several decades. Really? So what do? Okay, let's talk about a country that's in East Asia. Cambodia, for example. Cambodia is catching a lot of strays here. We come to an agreement with the Cambodian government to lower tariffs. So now we're going to make T-shirts in America, which if we made them in Cambodia, we could buy them for $2. Do we really think Americans are going to buy a T-shirt, same exact T-shirt here made in America for $20 versus those that are made in Cambodia for $2? No. So then we're still going to buy the stuff from Cambodia. The jobs aren't going to come back here. No one's going to open up a T-shirt manufacturing facility in the United States because you can't do it at the same cost. And again, the Cambodian government can't just tell their companies that you got to move locations. So unless we go to central planning, unless we all become Stalinists, no, none of this is going to work. No one's going to be compelled to move a private company's operations across sovereign borders simply to satisfy the whims of Donald Trump.
Okay, I don't think you're not answering. You're not participating in the premise of the question, which is fine.
I think it's a bullshit premise.
Yeah, I more enjoy you arguing your side of the point of view, or your point of view.
When I be wrong, when the S&P 500 is up at 5,800, that's when I'll be wrong. Until then, stocks are pricing in the future. It's a weighing and it's a voting machine, and the votes are coming in. And U.S. equities and the premium that U.S. stability and leadership affords the rest of the world is worth a 15% haircut on stock prices.
If Friday the S&P is at 56.50. Do you think you'll have this same? Do you think you'll have the same point of view with the same rhetoric?
Yeah, because my 5,800 calls won't be printing, so I'll be pissed for a different reason.
Okay.
No, I think that we need.
You're really digging in your heels here, and it's easy to do that on a down 3.5% day. But
I've been digging my heels all year long, though. Because I haven't been playing in the stock side of the pool all year long for this reason. So you've been a bear all day long.
Here's the thing. I don't get it.
No.
You've been a bear, or who's the bear between you and Ilya? Is it you or Ilya? And if you're the bull, how are you right now? I'm getting turned around.
Because being a bull in gold, if I'm a bull in gold, that still makes me a bull somewhere.
Got it.
No, he's been very outwardly bearish on stocks. Me having my more discrete technical overlay. Again, I'm always going to miss the tops and bottoms. I admit that about myself. That's just not the trading strategy, and so you have to be comfortable with where you're going to lose and understand that's a fact of life. But I have, again, avoided long stocks for the whole technical reason about the 5 EMA and not closing above the prior day's high throughout February and March. And then I took a swing on March 14th at the short put spread, which is obviously not going to do well here, was the 5550, 5500. So we're kind of there. If we bounce from here, I'm not going to be too much in trouble. The long calls that I purchased earlier is just going to eat dirt. That's fine, right? So I'm tactically trying to pick some opportunities here, but I'm not taking the swing. The swings were like the last 2 years when it's just buy out of the money calls and go fishing. So I'm not doing that. I'm not blindly bullish like I had been. But we get another little bit of a pullback here. You really get the fear to set in. We get a few more weeks of this. 52, 5,300 in ES, give us another 4 or 5% downside, and then we see the whites in people's eyes, and I think the Trump administration is going to blink. And
I don't think they do. I don't think they do. And I think what happens is this was very quickly going to shift from growth and just people freaking out over this knee-jerk reaction. I think that'll be the narrative tomorrow, because you can't be down 3 or 4% without that narrative. And then in a couple of days, we'll be talking about the Federal Reserve. People will shift their eyes to the fact that more easing is being priced in more quickly, and that this is opening up the path for the Federal Reserve to sort of to ease in monetary policy. And I don't know. Maybe you're right. You're a really smart dude, and I know you're really well researched.
I bought a 5,800 call today. That wasn't that smart.
But I try not to over-rotate on days like today. I think you got to be careful. But maybe you're right. Like you're trading with the trend right now, and the trend is down. It is for weakness. But
my rotation today again was just adding duration, right? So am I going to stick long bonds? Yeah. Am I going to stick long gold? For sure. I'm not rotating anything.
My word to the people would be, you're kind of supposed to start nibbling when things get cheap. It doesn't mean you need to be looking for the bottom. But if you liked Tesla at 500 and then you puked it at 300 and now you're looking at it and you don't want to touch it, and I'm not saying, I'm using Tesla as an example, all of this stuff is getting more fairly priced. It was ridiculous a few months ago. It was absolutely insane. It didn't make sense. And everyone's blaming it on this one single factor. And you can jump in with that bandwagon of a narrative if you want to. But the reality is it was unsustainable. Prices were unsustainable, and now they're getting more fairly valued. And if you don't have a list of things that you're slowly going to want to acquire at more reasonable prices, then this game is not for you. It honestly is not for you. If you're going to get freaked out by the markets and turmoil shit on CNBC, this game is not for you. When stocks get cheap, you're not looking for opportunities. This fucking game is not for you.
Did they do markets and turmoil? Hold on a second. You want to know what changes my tune? You want to know what changes my tune?
Chris Vecchio, dude, it's an honor and a pleasure. I enjoy this conversation more and more every week that we have it, my good friend. And not only did you bring the goods, and a strong, well-protected opinion or well-defended opinion, you brought the chest hair as well, man. So there was something for everybody on this podcast. If the people want more from you, and they should, tell them where they can go.
At CVecchioFX on Twitter or X, whatever we're calling it these days. You can always find me here on Tasty Live Monday through Friday, Futures Power Hour, 1 p.m. Eastern, overtime Monday through Thursday, 4 p.m. Eastern, right after last call. Let me explain. Tuesday mornings, 9:40 a.m. Eastern, and then, of course, here with Victor on Wednesdays, The Price of Truth, 6 p.m. Eastern.
My man, I really appreciate this conversation. Thank you very much for doing this. For all of you out there, do me a favor, hit the like button before you get out of here. Subscribe to the channel if you haven't already. Follow our good friend Chris Vecchio on Twitter. I'm sure he's on Blue Sky as well. Follow me at Victor Jones. The Owen Jones is 0 because I like to be difficult. You can send me an email as well to tell me all of your grievances with my opinions. It's victor.jones@tastylive.com. I'll see you back here tomorrow, same time, same place, same great network, only on Tasty Live. Until then, peace.